Good morning.
Hi, Klitos. They're having some issues, so Sadaf is resolving.
Sorry, there was some technical issue. And Good morning, everyone.
Good morning, Sadaf.
I think we should formally start, I guess. Okay, so Bismillahirrahmanirrahim and Assalamu alaikum, everyone. I'm Sayyida Sadaf Parker on behalf of National Institute of Banking and Finance. I welcome you all to today's webinar. As you are all aware that NABAF is training subsidiary of State Bank of Pakistan, and it is involved in capacity building initiatives of not only the central bank, but the entire financial industry of the country through various kinds of training interventions. NABAF has recently launched this series of webinars on issues of economic and financial significance, and today's webinar is also part of the same series. As you're all aware that SME is one of the important sectors of domestic economy that plays an essential role in promoting inclusive and sustainable economic growth. But we are facing certain challenges with respect to SME finance and SME banking. So today's webinar is being held to look at the best global practices and business models that have helped financial institutions around the world to increase SME banking on profitable basis, while at the same time have helped SMEs to grow their business on sustainable basis. We are glad to have experts with us from financial industry of not only our own country, but international experts who will be sharing their insights on successful models that have helped establish SME banking as a viable business proposition in the world and how that can be used in Pakistan. And we have our panelists that include, we are glad to have our panelist, Mr. Klitos Georgiou, who has more than 27 years of experience working as a senior executive providing risk management and consulting services to international banks and organizations and loan servicing companies in UK, Europe, Middle East, and Asia. He has also been engaged in providing consulting services to some of the leading banks in Pakistan. Then we have Mr. Kaiser Naseem, who has over 40 years of international experience in banking and finance, with over 26 years of experience with IFC and World Bank Group. He has also extensive experience in SME finance, sustainable development, digital transformation, and corporate governance. And he has been providing the advisory services to the leading banks and SME institutions in Pakistan. Last but not the least, Mr. Aamish Ahmed, who is head distribution, supply chain and construction financing, SME and commercial banking division in Bank Al-Falah. He'll be sharing his experience and how the international best practices in this area can be effectively applied in Pakistan. So before I pass on the control to Mr. Klitos, who will be first presenting, will be sharing his insight. For all the attendees, you can post your questions that you have in the question and answer session, in the question and answer chat box. And I'll be sharing those with all the presenters. In case some of the questions will get answered during the discussion, then we won't be addressing them at the end. But if any questions that are unanswered will be taken up during the discussion as well as at the end of the session. So over to you, Mr. Klitos.
Thank you, Sadaf. Thank you. Before sharing my screen, what I would like to say is during the presentation, if everyone wants to ask anything, they can push the button of raise hand, and we can accept also the questions from their side.
Okay, we have muted the participants as per format of the webinar, but they can share their questions in the question and answer, and they can raise their hand, so we can take them.
Okay. Let me share my screen. Okay. Can you see my screen?
Yes, we can see it.
Great. Good morning, everyone. As Sadaf said,
can you please run the presentation?
Can you see it, Sadaf?
Yes, we can see it, but in the presentation manual?
Here? Just put it in the presentation mode, the little cup on the bottom right, just press that.
Okay.
Yes.
Okay.
Thank you. Thank you.
Okay, share screen. Okay, great. So, good morning, everyone. My name is Georgiou. As I've said, I have 27 experience in international environment. I have done a couple of projects in Pakistan and also in Middle East, more than 50 projects in Middle East in SME banking. Today, we're going to cover, from my side, we're going to cover 3 areas: the global perspective and key constraints, integrated approach to SME banking, optimizing products and marketing strategies. Feel free to ask any questions during the presentation, please. I know that usually when you have a webinar, it's not so dynamic, but we would like to have a dynamic session today. So let's try to make it happen. So SME definition, this is usually the biggest challenge for every bank, for every organization. We have seen that in different banks in different countries, you have different definitions. Based on the World Bank definition, what we usually were aiming for is to have a micro, less than 10 employees, asset 100,000, and annual sales 100,000, less than 100,000. The small is 50, less than 50, the medium less than 300 employees, so on and so forth. If a company has 1 or 2 out of 3 of these, then we segment it as a micro, small, or medium. Sometimes you may have also exceptions, but usually this is what we want to follow in the World Bank Group definition. Now, global overview. What is important to mention here is that in the global environment, 90% of the businesses are SMEs, and they employed 50% worldwide. So this is a very big number. So you can see the dynamic of this segment, of SME segment, and the potential they have, and usually contribute up to 40% on the GDP, the national income, in emerging economies. Based on our research, we have seen is that by 2030, 600 million jobs will be needed to cover the SME development and growth. So the potentials are there. What is needed from our side is to have the appropriate products, appropriate processes to fulfill their needs. The other interesting factor here in this global overview is that 60 million firms, which is approximately 40% of normal micro, small, and medium enterprises, have a need of $5.2 trillion per year. So if we take into account all these 3 factors, it shows that SME is a very profitable market, a market that is growing all the time, year by year. And what is needed from our side is to fill the gap on the finance gap. In East Asia Pacific, we have a gap of 45%. In Latin America and Caribbean, 22%. Europe and Central Asia is less, 15%. South Asia, 7%. Sub-Saharan Africa, 7%. And Middle East and North Africa, 4%. We can see these numbers also in the next chart here. And you can see that in Middle East and Latin America, there is a need of 85% to fulfill the needs of the SME banking. Now, I'm sure that you're all aware that the constraints for SME growth usually is access to finance. This is a big issue that the companies are facing. If you can see small on the right side of the chart, small is the purple color, orange is the medium color, and blue is the large. So all of them, they have the same issue, access to finance. And the next thing is practice to the informal sector. We have lots of small businesses which they are not appear even in the GDP of the countries, that they have a need in financing. So if we can reach and make sure that we can fulfill their needs, then we'll have the growth and increase the employment for each country. One of the biggest challenges for SMEs is that if we are helping SME to grow, that means the economy will grow and the unemployment rate will go down. It's something that all the governments are very careful, and they want to push that. Now, I have split here the obstacles per segment. Obstacles to growth. First, as I said, access to finance, competition from the informal sector, and taxation. For the small-sized companies, they have access to finance the same, informality, and tax rates. To medium and large size, is again the access to finance, informality, but political stability is a new thing that comes to the table. So, based on all this, you can see that competition from the informal sector, informality, and access to finance are the major ones. So, all the products has to be taken into account these three elements. Now, what we have seen is that this is one of the biggest challenges I have seen in my experience, and also in any region, if the emerging market or developed market, because most of the banks, they have started as corporate banks. They usually try to have the same process and procedure they have for the corporate clients to their SME clients, and because they do BAU, they don't change the process and the procedure. So if they want to grant a loan of 100,000 USD or 50,000 USD, they have the same process like a 3 million corporate loan. So one of the biggest challenges we have faced during the project we did in the region is that we try to revise the application form and the process and procedures for the SMEs. This was the biggest challenge we faced. We had a lot of resistance to change at the beginning, but at the end we have managed to succeed on that. So this is the one thing. The second thing is secure lending. So most of the banks, they want to have secured lending approach for the SMEs. One alternative of this is to have inventory as security behind the SME. So it's another way of doing granting loans to them. And of course, what we have seen is that most of the banks, they have lots of products for SME, sometimes complicated, sometimes simple, but it's too much. What we have tried to do and successfully implemented is to have 3, 4 maximum products with specific clear lines, and in order to make sure that we cover the customer needs and not complicate the whole thing. Now, in order to have some raised hands, yes, of course. Hello?
Yes.
Someone wants to ask something? Yep.
Hello. Yes, Klitos, you can continue. We have a few questions. If you want to take it right now or at the end of the session.
If it's related with what I'm talking about, we can take it now, to make it more interactive, the session, I think. Or...
So the statistics that you shared, they're asking if these are of the regulated SME sector. So if you could please explain that. Yeah. And also they're saying that how is this finance gap ascertained?
Okay, so the statistics I have shared earlier, what is the question? The statistics I shared earlier?
It's in question and answer session. Are these statistics that you are sharing of regulated SME sector?
Yes, correct. That's why I mentioned earlier that in the informal sector, we don't have numbers. So, but it's an assumption that they have made based on our experience. Okay. And the second question?
The second question is, how is this finance gap ascertained?
Meaning?
You in previous slide shared something on which they're asking if the finance gap that you have explained, how can that be ascertained?
Okay.
Yes, this slide.
Yeah, here. Yeah. Okay. So this gap can be certain in terms of we can justify this and we can support this gap if we find a solution for the access to finance and practice of the informal sector. If we resolve these two issues, then these numbers will go up. Will go up. So the approach should be to find the right products and understand the customer needs.
Sorry, Klitos, can I just respond to the second part also? So There
Yeah.
are various studies being conducted globally, and the biggest and the largest is something called the Findex report, which the World Bank does every 4 years. The last one was 2018. And the way this is ascertained is that, there is a certain number of SMEs, like in Pakistan, there are almost 4 million, formal, informal. So those numbers are calculated. And how they're calculated is based on the fact that there is contribution to GDP, which is not recorded. So we've all heard of parallel economies and stuff like that, right? So this parallel economy, which contributes to GDP and which contributes to productivity, is captured not by the formal financial institutions, but informal loan sharks and friends and family. So that's the gap which formal institutions are not giving. So there is a gap which formal institutions can fill. So that is the gap that is being talked about. The Findex report does it every 4 years, but there are other publications also that do it yearly. And that gap is what the opportunity is for financial institutions, because there are several advantages, and we'll talk about that later, that these institutions can bring in to fill that gap, which the loan sharks cannot. So that's how the gap is ascertained. Sorry, Klitos, go ahead.
And sorry, Klitos, if I can just add a bit here as well. So very rightly pointed out by Klitos and Kaiser, and I think there's one more element that needs to be financed, or that we can consider, which is the growth opportunity these SMEs are missing out on, because they have capital, limited support from the financial institutions and these loan sharks and investors, whatever you want to call them, or friends and family. That is also a limited market or limited investment opportunity available. So whenever a growth opportunity comes towards an SME client or SME customer, they are not able to capture those opportunities. They cannot grow at the pace where the market is going because of the limited support from financial institutions available. So I think that is a huge gap as well, and the contribution or growth in SME market can be much more if we have a forthcoming outlook of financial institution towards SMEs.
And just to add something here, we'll see later on in another slide that globally, the GDP impact of SME is 40%, 40 to 50%, and in Pakistan it's something like 25%. So you have already, for the regulated one, a big chunk that can grow. But as I said earlier, and Kaiser and they mentioned also, practicing to informal sector. So if you focus on this, to friends and families business, then it's also a huge opportunity over there. Any other questions?
No questions. You can continue with the presentation, please.
Thank you. So, as I said here, design and implement specific product programs, approaches, in order to make sure that the products will be clear. But as I said, not more than 3 or 4 products for SMEs, just to make sure that you have clear lines and segment your portfolio in the right way. Now, invest in financial infrastructure to encourage SME. What we need here in order to support these needs is to have a very solid reporting system to track the data and the performance, and of course to strengthen the risk management unit to make sure that we're following and we're tracking all the performance. On the other hand, payment and settlement systems to facilitate access to finance services is very critical. We need to make sure that we have the way of link the payments and the settlement systems with the bank systems, and secure transaction systems and collateral registries, of course, in order to make sure that the collateral are taken into account. We don't have any fraudulent, or we can follow and manage those. So with these 3 components, you can have a very solid and robust approach for your SMEs. Now, Kaiser, this is about Pakistan. You want to cover this, or should you want me to cover?
You go ahead, and I think Aamish will be talking about this towards the end. And in any case, you can just go over this as a
just a high level. Yeah, a high level thing is that we have 3.2 million business enterprises in Pakistan, the regulated, and they have 35% share in the GDP. So compared to the 50% I mentioned earlier, so you can see the increase that can take into account. And also in the 50% of the GDP, 25% is for exports, 75% is for industrial employment. That is very important for the economy in Pakistan. So just from this slide, just keep two numbers, please, in your mind. 30% is GDP, the impact of SME GDP in Pakistan. And in more developed economies, we have 55%. So we have 25% to grow more, which is a huge number for the regulated one, not for the unregulated one. Overall here, in this triangle, we can see that 1% is the big corporates, medium enterprises 5 to 10%, and 9 to 95% we mentioned earlier is micro and small enterprises, the segmentation. Now, let's move to the next session, which is integrated approach to SME banking. What we need to have in mind when we are building the SME business is to link the personal with the personal relationship we have with the owners, also with their commercial needs. And if we can succeed on that, to link those two, then we have very profitable business. And also with this approach, we are serving also the economy because of the growth. One thing that we have seen is that the technology within those small companies is not so enhanced. So we need to make sure that we will finance technology projects for them in order to upgrade their present procedures and grow. Regarding the risk management system, what we have seen is that because of the crisis of the last 10 years, lots of banks, they have upgraded their risk management systems. Of course, there are lots of things that has to be taken into account still. In Europe, for example, we have a new regulation now, it's called PSD2, which allows, it's what we call open banking, and allows every bank to have access to all their clients with their approval, of course, to other banks, other institutions. So the competition is very high. That's why they need to have very solid and robust risk management processes in order to make sure that they are giving the granting loans to the right people, that they have the capacity to repay their loans. The other thing is digital transition provides. The digital transformation, and Kaiser will elaborate a little bit later, it shows that everything has to be digital. We are getting there, the present procedures, and use as less papers as we can within the bank, but also with our clients, with SME businesses. I have mentioned this earlier. This is one of personally, I think this is one of the biggest challenges that someone is facing currently, is to revise the whole process, the approval process for SME. Usually, you have to spend less time to approve or decline a loan for SME than a corporate account. The experience shows that usually the time for SME and corporates, the banks spend almost the same amount of time, which is totally wrong, because the profitability and the effort which is needed is it should be much less for SME than the corporates, because in corporates you have you have to design customized solutions for structured finance products, and you have also specialized products. On the other hand, on SME, you can, as I mentioned earlier, you can have what we said, specific products like a factory approach, product programs in place approved by the management, and based on that, you can fasten your process. The other thing that is a major difference from the corporate approach is that for the corporate ones, you have branch get involved in the process. In the SME clients, you may have distribution channels or using call centers for the whole process. So it's a multi-channel approach for SMEs and more agile than the corporate ones. Now, usually the banks, they have solutions that they think that they may work for their SME clients without doing any market research or checking the competition. They may check the competition sometimes, but they don't do market research. You need to do a market research and understand the needs of your SME customers. And of course, you need to close monitor your existing SME clients and understand their needs. Because based on that, you have new ideas how to support them. The other obstacle we are facing is that usually the SME businesses, they don't have a big control of their capital they are getting. So we need to be next to them to make sure that the finance they're getting from our side, from the bank side, goes to for the appropriate purpose. And we need to train them. One of the things that we have done in the past, we have sessions for cash flow analysis, how to do the cash flow analysis, how to read their books, the financial books. So we need to, if we train our customers, this will come back to us with better quality of data and better understanding of their needs, so they can come and talk to us. The other, and one of the issues that we have seen also is that usually someone is trying to get the loan, SME is trying to get the loan. The bank will approve the loan if the requirements are met, but we are not hand-holding them going forward to help them to grow. Because if we help the SME to grow, that means it will help us also to grow our portfolio. The last but not least is the influence from the government side. The government has, almost all government, they have programs for SMEs. We need to give feedback to the government and to the regulator what we think that has to be in place and how they can help the SMEs that they're underserved or unserved in the market. I think we have one question.
Yes, in the question and answer, if you can refer to your last slide, they are asking, can you please explain how to bundle personal and commercial banking?
Yes. Just to give you an example, I am a doctor, okay, and I have an account with the bank. At the same time, I have my office. I have patients come to my office, which is it's a company. So I can identify the doctors in my portfolio and make offers for their machinery. They want to buy machinery, whatever, and make a proposal to them. So I can combine the two, my personal account, my personal relationship with the bank, plus with my business profession. What we have seen also, and this is a very good exercise I have done many times, and always irrespectively of the developing market or emerging market, the result is the same. If you go and run a query about your current accounts, SME current accounts versus SME loan portfolio, usually the SME current amount is higher, so you can self-fund your loan for SMEs. This is something which is very critical. And if you can see this, that it works, then you can have more room to growth. You are not using the capital of your bank. You're using the capital of your own clients, SME clients, to fund them. So if you want, you can do this exercise and then test it. And I'm sure that you'll get the same result. Did I answer the question or any more clarifications?
We have another question. If you want to take it right now or at the end, having high level of informal sector in countries like Pakistan, involving banks and such financing would create financial stability issues. So what's your point of view on it?
Yeah.
If you want, I can answer that later on.
Yes, sir. Oh, you want to answer it now? Kaz, you want to answer it now, just to not to leave it later?
Okay, because technology has a lot to do with it. Look, yeah, it's the informal sector, and I think the biggest hurdle to any large institution, financial institution, to having neglected this sector is because they can't assess the risk of this sector. And we'll talk more about that actually in my session. So you've got to do it properly. Look, this is a sector, a segment of the economy which contributes a lot to GDP. Even this 25%, I would say, is understated. A lot of it is not captured in countries like ours. So commercial banks whose job is to lend money or provide financial services for economic impact, that's their job. That's their mission in life. It's not T-bills. That's not the mission in life. Mission in life is to have impact on the economy. So this is a huge segment of the economy. So you've got to figure out a way of how you can target it. It will not cause, countries have done it, it will not cause any sectoral inefficiencies or crisis if done properly. Of course, if it's not done properly, then even the largest loan, which has been proven in Pakistan, has caused financial instability, larger loans, as a matter of fact. So I'll just stop here right now.
And one other thing, Kaiser can add here is that you can think what kind of products these individual entrepreneurs or very small companies needs. You can do a market share, a market research, and see, okay, let's try to bring them in to the bank. Well, how we can achieve that? You have to figure it out based on the research you will do. And you will see that it will work, because usually the answer is there in front of you, but you can't see very clearly because you have other things to think. But I'm sure that if you sit down and trying to work, especially for this segment, things will come up to into your face, in front of your face. Now, SME sector within the bank. All banks, they are publishing the advertising for SME, where the SME bank for the future, we have this, we have that, this kind of stuff. One thing they don't do usually, because they have the impression that what they do is correct, since they have a portfolio, they have some loans. Of course, they have loans because SME, they need financing in growth. Is to do one step back and start thinking how I can improve internally my capabilities, have more sustainable SME segment and portfolio. Usually, we follow the flow. We don't try to go against the flow or even change the flow. So one thing some has to do is to one step back, try to understand what new capabilities, the world is changing. So we require new capabilities and to have a more sustainable segment. Cost benefit analysis. We are giving products to our segment, SME segment. Are they profitable? Are we making money? Are we losing money? Can we decrease or increase the interest rate for the benefit of the customer of the bank? So this kind of questions has to be answered based on the cost benefit analysis, and to have a profitability per product. I mentioned earlier that a product program has to be in place. Usually the product program, some banks they have it, some banks they don't. It's around 20 pages. And then you can describe also your plan for the next 3 years and have targets and KPIs. So on an annual basis, you can review and see how did I meet my KPIs? Yes, perfect. Let's go to the year 2, year 3. If not, then you have to readjust, change your strategy. And you have to make an impact to the SME. segment as a bank. So you need to make sure that what you are offering, it will make the difference. I mentioned earlier, and I will see later on in the marketing approach, that look around you, look what the market is doing, not only in Pakistan, but also globally, what things are happening right now. So take ideas from there, or have sessions, internal sessions, or with specialists, to make sure that new things and new approaches will come to the table and will start designing the next day for your business. The resources is one of the issues that we're facing in SME. We have people saying that they are good in SME, but we never send them to do a training. We train them ourselves. We call it hands-on training, but we need to train those people. We need to talk to them about strategy, how we build products, send them in the front line at the branch level or to the field to meet with the customers and understand the market. And of course, beside the resources is the tools. Do we have the appropriate tools, automated ones, to use and make the life of our colleagues easier? And if you have tools, then if you have tools, you can track the performance, you can monitor, you can make changes. The MIS, the last, and not least, MIS tools is very critical. So we need to make sure that the data is there, the quality of data is good, and we track all this data and come up with specific analysis. And we share the analysis within the segment, the SME segment, within the bank. Usually what is happening, we have data, someone is building analysis, pages and pages and slides, but no one is seeing that. So we need to make sure that we expose information outside of the division of the department, and we share the information to make the life easier for our colleagues. Risk management. Regarding risk management, there are 5 components: understand the SME market, develop products and services, acquire and screen SME clients, serve SME clients, manage information and knowledge. So first of all is to understand the risk of the market per segment. So if everything is in place and you have data, either you can get the analysis, internal analysis for your segment or sub-segments from your colleagues, or you can have international or regulator studies that they have done for each segment or in total. And based on that, you can identify the risk of the market and where the market is going. And of course, enhance predictive capabilities, the projection. Make sure that the projections you have in place are based on data, not just because it's a feeling. Try to find the data, and even with assumptions, with data assumptions, you can succeed on that. Develop products. I'm saying here, develop loan pricing models, or either you can hear less risk-based pricing products. Develop those kind of products. And based on that, you will see that you have a full control of your portfolio. Try to incorporate innovative solutions. I mentioned this earlier, but I'm repeating myself here. In terms of secured collaterals, secured collaterals, you can also account receivables for collaterals. You can start thinking innovative. What other things can be put as collateral for your accounts? Or maybe you don't want to have a collateral for some very small amounts. You can. Usually the banks are afraid of granting loans with no collaterals. Okay, it's fine. I can hear that. But if you can test it. You can say, okay, I will have, let's say, 5 million. I will grant 5 million amount to very small enterprises with small amounts to test it. So you can test things. It's a trial. You have to always to try to test things. Have what we call champion and challenger. Champion is what is happening now. Challenger is what you are testing. And if the challenger is successful, becomes a champion, and then you have a new challenger. So it's a very dynamic approach for the SME market. Try to understand your clients, your existing clients. As said earlier, you have most of them, they have current accounts with you, but they may not have loans with you. So approach them. Try to understand their needs. Of course, I assume that you have internal rating or scoring methods, scoring models to assess this. And of course, in the policy for this has to be also in place. Use the Great Bureau reports if they are available. As far as I know, in Pakistan, you have a Great Bureau report and you can use it. And of course, separate the sales from credit approval, not to have any conflict of interest. Now, this is one of my favorite columns. Serve SME clients. If you have a good service to your SME clients, you can increase your APR. An SME client, what he wants is to have a flexible and fast service. And he's willing to pay even 1% or 1.5% more if he gets the service. And help them and train them for the cash flow, how to do their own cash flow. Usually they don't know. They bring the paper and say, okay, do it for me. You can create conferences or training sessions to train the SME how to do the cash flow. This will help them also will help you at the same time. And the last one, it's MIS. Try to track all the data. One of the things we have faced in different banks is that if an SME client goes to the bank, to the operation officer, usually they do an assessment over there. They say you'll get the loan or you're not getting the loan, so don't do an application. We want all the applications in. Why? Because today some might not be eligible to get a loan, but tomorrow might be eligible. So we need all the available information. It will help us. It will help our analysis. Why we are rejecting loans? What is the reason? And what do we need to do in order to improve that? And of course, the models you are building, you need to be customized and validate every 6 or 8 months. I think we have one question.
Should I read it to you, or
yes,
can you say?
Yes, I cannot see it, so sorry.
Okay, so the question is approach of application analysis, lending on cash flow basis and high risk elements of lending would markup rate would be very high in countries like Pakistan, or would it make lending viable for borrowers and operations competitive?
Look, it will be viable in Pakistan, actually viable everywhere, not only Pakistan. Because as I said, if I go back, I recall one of my slides. Here on the left side says SME can sometimes tend to become not sufficient strict with external capital, as they do not have the same kind of capital controls or as they are large organizations. So this will help them to have control of their capital they're getting from the bank, and at the same time to understand their needs. And this has to do with, for the informal businesses, of course, but also for the regulated ones. So it's needed. And this is something that I personally strongly recommend. Train your customers, arrange trainings for this, and you'll see the impact and how this will change, and the customer will appreciate that.
Can I just bug in here?
Just, of course.
Respond to that. I think the question was a little different, at least the way I understood it. I think it reflects that the rate of return, the interest rate would be higher if you factor in the risk of lending to that segment. I think that probably was the question. And I think that has always been an issue, especially in Pakistan. because, I mean, I've said it many times, I say it again, even if it is higher, SMEs will take borrowing, will because they have no access to finance from formal sectors. So it's something that SMEs are open to. The other reason is they are borrowing, right? They are right now in existing. You see your corner shop when you go every morning, maybe for the last 30 years, you've seen the little bicycle repair shop or the little coca in the corner selling cigarettes or whatever. They've been there forever. So someone is funding them. And I know for a fact, I'm sure all of you are SME bankers know for a fact where they get that funding from. And I'm sure you also know how much that funding costs. For instance, the trucking sector in Pakistan, they borrow mostly from loan sharks. It's not that organized, it's become organized now. And it's 100% per year. This was 20 years ago. Maybe it's gone up now. So that was the percentage they're paying. So if you replace that, even by 25%, and there is a reason why this rate is higher. It is the risk, absolutely, very rightly pointed out, but it also is the cost of reaching out to SMEs. It's not easy to disperse a small loan of 100,000 rupees or 500,000 rupees. It costs a lot of money to disperse. So the interest rate has to be high, but it is palatable. And it's been done. Even in Pakistan, there are borrowers who borrowed at that rate. Sorry, there's a question before that also from, I think it was from Sajjad on
Kaiser,
Islamic.
One thing, just something here regarding the risk and that someone is willing to take. If you have the appropriate tools, the policy in place, and scoring models, you can identify the risk. And based on that, that's why I mentioned here on my second column, develop loan pricing models. You can have your own model to subsidize the risk you are willing to take. So you can cover this. Sorry, Kaiser.
Right, for each institution. Again, the issue here has always been that the government has subsidized it. They always, this is a slogan. I'll talk about it. It's with your and my money. It was not yours, but Aamish and my money, our taxpayer money, is what subsidizes SMEs, who then, because they haven't got the right kind of financing, again, we'll go into that in more detail, are not actually impacting the economy the way they could have impacted it if they had the right structure of the financing and all that. But just going back, there was a question, you probably missed that on Islamic finance. I thought that was very interesting. It was from Sajjad Baraich, if I'm not mistaken, that a lot of SME borrowers, smaller borrowers, even larger, but smaller borrowers in particular, globally, by the way, in MENA region especially, are not going to borrow from a formal institution if it's not an Islamic mode of financing. And the reason I say that is because we did a survey for, I think, 15 countries in MENA. I was still with IFC. This is 2014, I think. And we did a survey in Pakistan, I think, with the SBP at that time. And 25% of the SMEs said they would not borrow if it's not an Islamic mode of financing. So yes, we need to create structures. We need to enhance. I mean, today it's just 12% of the total SME lending, which itself is very low, which is like 7% of the total lending. So it's 12% of the 7% is Islamic. So that needs to increase. And that is one way of increasing the outreach and bringing in, increasing this 164,000 SMEs to a higher number. Again, I'll talk more about it in my session. Sorry to keep interrupting you.
No, Kaiser, no worries. Just to add something here, you can have Islamic products, Islamic banking products. I mentioned earlier that you need to have 3-4 products for SMEs. One of them might be this one. So it's up to you to decide which strategy you want to follow. Later on, I will talk about also women entrepreneurs and SME. You can create also products for women, SME women, and help them. So it's up to you to say, okay, for Islamic banking, we have a market there. So we need to build a product for Islamic market and start building it. Regarding, just to go back, since we're talking about managing credit risk, you can manage your risk. This is not a problem. The problem is to make sure that they're collecting data. If you're collecting data, then you can manage your risk and you can take the right decisions. Now, one thing is managing the risk and approving the loans and everything. The other thing is the cost, the operational cost. you need to make sure that things are in place in order to have profitability for your own organization. So you need to go to the first column, understand the SME market in terms of pricing. If your pricing is the appropriate pricing to subsidize the risk for specific segments. Make sure that the pricing will not impact the growth of your portfolio also. And then develop the products. You can have a bundle of products. I mentioned earlier, personal versus the business of someone. So you can have a bundle of products. You can have new products that doesn't exist yet to support the new generations. So, but as said, not too many, 3, 4 max, and well defined, in order to make sure that the sales people will understand the product, so they can discuss with the customer and trying to fill his needs. And one of the things that is very critical to mention again here is go to your current portfolio. Don't look around. Don't spend time to go in the market and find new customers. You have customers for sure in your portfolio. Try to understand which of them they have needs and offer them the appropriate product. One of the things that is changing these days is the automation of the screening and credit process. This has to be fully automated from day 1 until day 3, day 4, day 11 if you disperse the money. No, it should be paperless. And of course, the service for your SME. You need to have a dedicated persons to serve the SME segment. Not someone in the branch level doing other stuff plus SME. You need to have the SME officer, the SME staff. So someone from SME sector wants to get a grant loan, has to go there. He knows, usually they know they have a good relation with the officer, and they go and they discuss their needs. And of course, you can also, for sales approach, you can use call centers for direct sales, either one of the two. And the last one, again for the MIS, based on the data you are gathering, you can enhance your profitability and make sure you can have profitability based on branch, on product, or on client. So be more specific. And with this approach, it will give you ideas which products you want to push more to sell, which clients, which branches they need more help. For example, if you have a branch that is not profitable in SME segment, and another branch in the same area is profitable, then you go in and try to help the branch which is weak, how to improve the SME profitability and the products over there. So it needs help. Now, regarding the financial interventions for SMEs, we need to be dynamic. We need to go and try to understand what is needed for them. Usually we offer them what the bank has. I have this product, I have that product. We don't try to understand their needs and then offer them what can be the best solution for them. The other thing which it works successfully, we have tested, is that since we have access to finance issues, is the biggest factor actually, we can combine this with trainings, incubation, co-investing, so creating networks, trying to build an ecosystem for SME segment within the bank and also with your clients, SME clients. This approach will help both directions. It will help that direction from the bank to grow the portfolio, but also from the other side to get to know better what is happening and what they can do, what they can get. It's very critical, and very few banks are doing that, to have training sessions with your SME or conferences with your SME clients, to invite them and present to them what is a new product or what you are thinking about, and get their feeling and have the discussion with them. Now, the credit constraints for high growth SMEs and startups, you need to think smart, because if we overcome the credit constraints and find solutions, then the startups which they have high growth, they go sky high, and this will have impact on the employment. So more people will get employed, which is very important. So more people get employed, so more the business is growing, so they will need more capital, and they will come back to you. And of course, it's very important to make sure that you have the tools, or you are doing the analysis that is required to identify the high growth SMEs, or where is the opportunity. Maybe it's not a very high growth, but it's a growth SME. Where is the opportunity? And you have your business experts, and talk to them and try to understand what kind of product programs or new products can help them to increase. The last one, we mentioned earlier, the Islamic banking for Islamic products, which is something that is very important. Also, it's important to have women products for SMEs, women-owned SMEs. We have seen that the women are more conservative when they are doing business, but they are more profitable. So try to upscale their skills and build capacity for them, and create products for this sector to make sure that they will cover their needs. And the next one is optimizing products and marketing strategy. I think we have some questions.
I think the questions that we are receiving are mostly in the context of Pakistan. So maybe Kaiser and Aamish can take them later. So you can.
Okay. Optimizing products and marketing strategies. Now, most of the banks, regarding the marketing approach, they may do a research of what kind of products there are in the market, but they're not doing a lot of things. So we need to have a budget for marketing to take actions and advertise what we are offering. Just to give you an example, we were doing with IFC a project in one country. I don't want to disclose the name of the country or the bank. And we said, okay, we have revised the whole SME process and products. So the risk management approach, the credit approval process, we automate lots of things. We came out with new products. And what we said to the CEO of the bank is that, okay, you are ready to launch. You need to do advertising. And he was thinking, okay, I will go to the newspapers, I will go to the radio, to the TV, and do some advertisement there. What we suggested to him is that you can have big panels in the streets saying that Bank X is giving up to 200 million USD to SME clients. This was a very smart idea and successful one. Why? For two reasons. the Bank X became more, the brand awareness of the bank increased dramatically. Secondly, our regulator congratulated the bank for this initiative. And third, they saw suddenly lots of applications coming for new loans. So market is critical. It's a critical factor in your bank for SMEs. So has to be involved. They have to understand your strategy and try to advertise and find the appropriate marketing campaigns for the SME. Usually, on the left side, when we want to launch a new product, what we do, we go to the internet, we check what the competition is doing, we are doing some fine tuning, and we say, okay, this is a product. We don't do any analysis on our existing data or with our existing customers. So this is something we have to do. We have to do it. It's not only what is in the internet in our bank, in our region, but we have to also check what other regions are doing. Utilize this know-how that is there. It's in the internet. It's there. You can take it. E-commerce. We need to have marketing strategy for e-commerce companies because all of them, they don't have the same thing, the same needs. So we need to make sure that what we are presenting to them, what as a product, if we have a product for e-commerce, of course, is well presented. In countries, big countries like Pakistan, you have what we call local ranking strategy. At the local level, you may have products that they are not applicable in different regions. So try to identify which products are applicable in one region specifically and start working on it. And say this product is for region A, the other product is for region B because it works better. The importance of mobile. Try to have products or approvals, a process approval via mobile. The bank now is just a mobile device. That's it. The world has changed a lot. So in case of high utilization of mobiles in Pakistan, you have that, then you can start thinking innovatively how you can increase that. I'm finishing this slide and I will take the question later, just to finish the last one. So digital culture. Kaiser will talk later about this. So the digital, everything has to be digital within the bank and also with SME. Try to have courses with your SME clients to show to them and train them how the digital world is changing and what are the benefits for them. The last one for this slide is, I said earlier, is go and check what is happening globally. What are the products, SME products that they have? And they may not be applicable to Pakistan 100%, but for sure 80% will be applicable. So you do a fine tuning of 20%, and you have products that are working and have been tested in other markets. The questions should take later on, or Sadaf?
Yes, please, Klitos.
Yeah. Should we take the question now or later?
I think we've already.
We can say it on the session end.
We can take questions later.
Okay. Now, data. You keep hearing me talking about data, and that is very important. I'm sure that all of you are aware of that. So, one thing we need to make sure that usually we collect data at the bank level, but we don't structure it correctly. And because we don't structure it correctly, we don't use it. We said our data is crap. No, it's not crap. You have to structure it. If you structure it, then you can analyze it. You can come with conclusions. You can, based on the data you have today versus the data you had 2 years ago or 3 years ago, you can compare and you can see the trends. You can come with new ideas. So it's very important to have a strong analytics unit of doing this. Usually this unit sits either on the business side or IT or at risk. So it depends where you want to put it. The thing is that you need to have someone working only for SME analytics to provide input to the people. Of course, you have the review of the performance of business. You have the annual reviews, I assume. So for these reviews, you need to make sure that you have an automated way of doing it instead of doing it with paper, on paper. So have a strictly automated approach in order to, on the annual review you're doing, you can either inform your SME clients about the results, because they may need more capital because of your annual review, or you have to warn them that things are not going well and you're close monitoring them and help them to move forward in the appropriate way. Audit applications, I have mentioned this earlier about the fact that usually we are using the same application from the corporate side. If you have revised your applications and they are more custom made for SME segment, that doesn't mean you don't have to change it again. You have to revise it. You have to always see and revise your process and procedures because things are changing. So I would suggest at least once a year, based on the data you are gathering and the analysis you are doing, to review again your application because new things are coming in. Develop goals. I am sure that everyone has incentives on the sales side and KPIs, but we need to take into account also the fact that the fact that what has been done in the past, analyze it, and come with new goals. Now, operational strategy. This is for at the high level, at the bank level. We have 3 components here. We have provision and facilitation of services, building a conducive environment, and developing sectors and clusters. Provision and facilitation of services. The first thing is investment facilitation. Try to help for the investment for the SME segment. To find appropriate either investors help from working with the bank or granting loans. Technology, training, and finance business information, marketing and legal support. These are the things that SMEs needs. So make sure that you can cover these needs for your SME clients. Of course, productivity and competitiveness improvement for the staff. Now, based on the experience you have from your SME clients, because you're actually the ears and the eyes of the bank, because you have the relationship with the customer, you can help the regulatory environment and make changes on the policy to help the state. At the same time, because of this, you are reducing the cost of doing business. That makes the SME more profitable. The last one is that try to facilitate the government with SME. So be there and try to create a committee or a team or specialist having sessions every 3 months, every 6 months with the government talking to them about the needs of the market. Now, developing sectors and clusters. I assume that you have sector studies in Pakistan, so you're taking the reports, and based on that, you can think of new strategies and implementing strategies. Of course, you can do also class development and common facility centers. Now, regarding marketing, for the marketing purposes, one of the things that we need to take into account is to create marketing research about SMEs, to understand the environment of SMEs in the country. You may want to also to expand this to informal businesses, not only to SMEs. So do the research, see the results. Based on the results, you can have either fine-tune your products, or you can create new products and maybe withdraw some old products because there is no need for them. So this is very critical to assess and define the business objectives for your needs. KPIs is very critical aspect. You need to have KPIs to see the performance of your employees and of bank employees actually, and also of the SME performance. But don't build KPIs, 20 KPIs, 100 KPIs. No, keep KPIs low, the number of KPIs low, so you'll be able to track them. Sometimes we have KPIs, but we don't track them, we don't use them, so it's useless. So try to define which KPIs are critical and monitor them. Customer-centric. Try to understand and tailor your strategy based on customer needs. I'm always saying today customer needs, because usually we don't see that. We have the products and we go and sell the products. I always insist in this approach that we need to understand the customer needs, and based on the customer needs, we can create the journey of our customers in order to be very fast, efficient, and digital. From the very first moment that the SME customer walks into the branch to do the application until the end. Listen to data. Here is what we have discussed earlier. Try to collect not only the data from the risk or customer approach, also from digital sources, and try to collect it, analyze it, and create new ideas and positive impact on your SME clientele and also on SME revenues. And the last one, but not least, is the compliance issues. In Europe, in Europe, we have the data protection law, which is very strict, and also in the US. So make sure that everything we are doing is in compliance with the regulation, in order not to have any surprises going forward. That's all from my side.
Thank you very much, Klitos. I will invite Kaiser to take over from here. And since most of the questions are in context of Pakistan, maybe he can address those questions as well during his discussion.
I'll answer the easy ones, and Aamish can answer difficult ones.
Klitos can always help you. Thank you.
Yeah.
So over to you, sir.
Okay, so thanks a lot, Klitos. That was a very good segue into the SME landscape globally and in Pakistan. the topic I have actually is called leveraging IT, MIS, and HR for improving the way we bank SMEs. So I just call it leveraging technology actually, and HR maybe. But before that, let me just mention that my format is going to be a talk, and it's not about telling you something new, because I believe all of you, first of all, are bankers, and many of you, if not all of you, are SME bankers, something we didn't have 20 years ago. And I believe we have them now. I think I was telling Aamish that yesterday. So what I am going to do is just share some thoughts and some ideas I have given my work in the SME sphere for the past many decades. And before that, I would also like to mention that we have a few, I think, guests from Central Asian countries and perhaps also from Dubai. I don't know, can't see the names of the countries. So just a warm welcome to them. And again, having worked in those parts of the world, I can say that many of these countries look at Pakistan as a model for good banking and good bankers. So better make a good impression, all of you, with your questions and the answers. So look, like I said, it's about the SME sector. And I don't think we need to emphasize how important that segment is to the economy of any country. We've seen the figures. We've known these figures, actually. Governments over the past 2 decades plus, including the government of Pakistan, has mentioned SME as a cornerstone, always mentioned them as a cornerstone of any economic development policies that they have, but mentioned them. But yes, we have made strides in that respect in Pakistan, bringing the context back here. If I was a politician, I would have said we've made huge strides, but unfortunately, we've not made huge strides, but we have made strides. And that's reflected actually in the figures that we have, the published figures from the central bank, from the State Bank of Pakistan. I think for the last 5 or 6 years, if I'm not mistaken, and we were instrumental in bringing that policy. Again, when I had my IFC cap on, I think it was 20% or 25% of portfolios of financial institutions, commercial banks, had to be in the SME sector. And today in 2022, it's like 7% or less than 7%. It did go up to perhaps maybe higher to 12 or 13%, but never, I don't think we ever reached 20%. And it's very evident from the fact that our outreach to the more than 3.5 million SMEs is just 8%. So we've captured in all these huge financial institutions, the commercial banks, and perhaps the DFIs and other institutions also, just 8% of these 2 million or 3 million, 3.5 million, well, 3.5 if you include micros. So if you're just talking about S, so perhaps it's 8% of the S that has been captured. So that's a pretty dismal figure. Now, having said that, it's not easy, of course, but it's been 2 decades. We've worked a lot with commercial banks in Pakistan and globally, as some of you may know, in building capacities. And this was not a problem with Pakistan, by the way. This is a problem even in developed countries. Even in the US, they've had a lot of debacles, even in Europe, of how to tackle the SME dilemma. But they built capacity. I think we spoke about successful models, and I think that was what Klitos was talking about. How do you build successful models for SME banking? And these models have actually also evolved over the years. So we started off with, the right structure, the right type of financing, the right type of SME, make sure you have the ability to assess the risk. So these were sort of the structures, the scoring model, if you're doing retail. But today, in 2022, we have much more powerful tools in our hands to structure better models. And that tool is technology, of course. And like I said earlier, the main reason why commercial institutions, commercial banks did not target SMEs was they did not understand what these SMEs were in terms of the risk. Because that's the job of a bank, right? The job is to take the risk. The higher the risk, the better the return. But even to take risk, you need to be educated on what is that risk and where can you mitigate that risk. And it was easier for commercial banks to do it, obviously, with bigger clients. And that has something to do with KPIs, and I talk about that when we talk about HR. So big clients, you have your goals met, and you don't need to bother about anything because that is your KPI. You have to hit the bottom line, and you have to push out a certain amount of money out of the door of the bank. So that was done and taken care of. But in the process, 90% of the businesses in a country, talking about Pakistan, were unable to assess these products and services from banks because the banks didn't know how to and they didn't really bother. They started bothering in 2008 when these big giants and multinationals and local corporates in Pakistan were not able to borrow anymore because of what happened in the financial crisis. And we know that, and Klitos and I both know that very well, because that's when banks, even from Pakistan, came knocking at the door and said, okay, you spoke about SMEs 5 years ago. So now's the time. I mean, we don't have these big businesses anymore. So how do you do that? So that's how we started building the capacity of doing that. And we didn't have the technology at that time. So these were the models which evolved. The data was there with banks. They always had the data, but there was no idea of how to slice and dice the data. So technology is what we need to leverage today if big institutions, want to increase their outreach. I think we all know this 8% penetration is what type of SMEs these are. We know that, right? I mean, I don't think I need to elaborate on it. They're not really the S's or the micros that need support from banks, but there's a reason why they're in there. So I'm actually surprised by isn't it 20%? You could have had the 20% figure with these type of S's. So to increase that outreach, you need to leverage technology. And the reason you need to leverage technology is because you need to be able to better assess the risk. That's number one. And number two, coming back again to a question about, I think, repayments and NPLs. So this actually comes into play with technology, because the better you are at assessing the risk and mitigating the risk, the better you are in lowering your NPLs. So it's in a way related to the pricing, but again, we'll talk about that, but it's not entirely the pricing. Because in SMEs, you can have differentiated pricing, and you should have differentiated pricing depending on the cash flows and the type of business you're lending to. So that's one thing. I think that's a model we spoke about 5 or 6 years ago. Some of you may have worked with us. I don't know. You're from various banks. I mean, we work with all of them. And they're being practiced right now. They're being practiced. But today, what banks need to do, and technology platforms, the fintechs, are doing, is using technology to assess risk. And there are two types of risks when you're talking about banks. One is the risk of onboarding a client. And we're talking about new clients, because if you're increasing your outreach from 8% to 20%, talking about SMEs, you need to reach out to new clients and new companies. And onboarding them is not easy. But with technology, today you are able to do that. And with non-traditional data, so that's something banks have to get attuned to. It's not the traditional data you're looking at. It's not the balance sheet or the financial statements that you're going to look for. It's non-traditional data. It's payment of utility bills. It's use of your cell phones. It's how many times you use social media, things like that. These are non-traditional data. So that has to be leveraged to get a picture or a risk profile of the person you're onboarding. So that's the first part. And I think that's the one which is the weakest link, not in Pakistan, but also elsewhere. The other, obviously, is when you're lending. So that's the other point where banks have to be very good at risk assessment. And hence, where we've ended up globally, not just in Pakistan, is leveraging technology for a very important part of banking, but the easier part, which is transactions, which is payments. So you pass it through and you ease the payments. And so that's the one which has been digitized first. But that's not the only thing banks do. And that's something, again, which needs to be and I'll be talking about digital strategy also. So banks need to realize it's not just payments, it's not just transactions, very big piece of banking, but not the only piece, especially if you want to have economic impact. And let me repeat it again, because this is something I'm a development banker, and I've been saying it for many years, that's the job of banks. The job of banks is not to make profits. The job of banks is not to throw money out of the window or through their door. The job is to make sure that the funds which have been deposited in banks from taxpayers, from depositors, are then distributed in the economy to segments which can have an impact on that economy, which can add value to raw materials from that economy and get earnings that then go into our coffers to run our government, to build the roads and highways. And so it's not IMF which should be doing it, it's us. But it won't happen unless the banks channel the money to more productive sort of businesses. And again, like we see SMEs, because they're entrepreneurial, have a big impact. And I think Aamish gave a very good point when he mentioned that they are not able to meet their abilities also because of lack of financial and banking services. So they may have an impact today, but the point is they have a bigger impact. They can have a bigger impact if they had access to finance and banking. And my favorite example 20 years ago, I'm sorry to get back into that. I don't know how many of you are listening who had worked with me, but I used to give this example of this football manufacturer in Sialkot who would export one football, just as an example, to a European country. And he was very happy with that one football because he earned enough to feed his family and to send his kids to school. And so it's the responsibility of banks and other government bodies to tell that guy, that entrepreneur, look, you're doing such a wonderful job. Why don't you make 2 footballs? And the guy will say, well, I don't really need it. I'm happy with the $100 I get every month. But the answer is that you should be able, because you have the ability to do that. Make 2 footballs, you keep 100 for your family, the 100 can be reinvested into the economy. And that's what impact is in economic development. So that person, because if you're not an entrepreneur, you're not the one who's going to make that football. This guy has the ability. But the bank has the ability to leverage his talents by offering him banking services. Only if the bank understands this concept that so T-bills, I keep saying that, T-bills is not adding any value. T-bills is going to pay salaries, let me not get into that, of people who, I don't think have any concern on economic development. So that's not the purpose of T-bills. Your money should be going into economic impact. And SMEs are the ones, like entrepreneurs basically, are the ones who can have the most impact. So technology, just coming back, so how do you leverage technology? Again, all banks in Pakistan, without exception, have jumped onto that. All the banks are leveraging technology to an extent, but are they doing it strategically? And my experience shows that not many are, some may be. So leveraging anything has to be done strategically. And what that means is that you should have a digitalization strategy first in place before you embark upon creating an app, which is just a front end, by the way. So 5-6 years ago, you had an app and banks would say, look, we're digital. That was nothing to do with digital. That was just customer experience, that you could, instead of your computer screen, you could look at your account on a mobile app. So you need to go deeper than that. You need to have a digital strategy. You may start with the app, but where are you going to? And how does that digital strategy come about? It has to be aligned with your business plan. So each bank, hopefully, has a business plan that next 5 years, these are the segments of the market they want to target. This is the type of growth they are looking at. And these are the type of clients that they want to onboard, new to bank clients they want to onboard, some strategy they have. So if they have a business strategy, the next step is to see how that business strategy can be executed or implemented in 2022 using technology. Because you can do a lot more now that you have that technology. And hence, that digital strategy will tell you what you need to digitize, at what time and why. And that's a digital strategy. So you just don't come in that a vendor came to you and said, we can develop you a product to onboard new clients, or we can develop a lending product for you? Does it meet your business strategy? A good example, a bank, one of the best SME banks now, we worked with them 5 or 6 years ago. It's called OTP, Opportunity Bank in Serbia. So OBS, the one in Serbia, but Opportunity Group has like 15 banks globally. So we worked as IFC as a team with the one in Serbia, and they are mostly targeting farmers. Serbia is a farming sort of a country, corn basically, and wheat and all that. So most of their clients are farmers, which is a very difficult thing. And I'm sure a lot of you are from the agriculture segment of your banks, which is another pain point. And I remember with HPL, we worked with, I don't know if he's on this webinar, but I know Kashif Thanvi is doing his own webinar. I saw that on LinkedIn on agri, which is a segment also neglected. I think we're in Pakistan, 15% of what is needed in terms of financing and banking services to agri, only 15% is being met. And of that 15%, I think 60% is by the National Bank of Pakistan. And the rest 40% of that 15% is by all the other banks. So huge opportunity. So Serbia wanted to go deeper into the market. And again, just from the top of my head, they had, let's say, 1,000 clients. They wanted to go over the next 5 years to 5,000 clients. So new to bank clients. So what did they need in terms of their digital strategy? They didn't need an app. What they needed was an onboarding platform, because new to bank. And what did you need in that onboarding platform? You needed data on what do you measure to make sure that the farmer you are lending to is worthy of getting a loan from Opportunity Bank. And that's what they built. And they built that based on data because, again, Serbia is one of those few countries, and Pakistan actually is one of the leading ones, who have a national ID system. So you can have a lot of information immediately from NADRA. And Serbia had their national ID, and they could get a lot of information of how many family members a farmer has, and how many people are working, and what is the family income, and what size of his plot, and how much is he growing on that, and what is the crops. All this went in, and they could easily assess that this farmer over the last 5 years has done good work, so we should onboard him and try and make him expand. So how do you make him expand? You need another platform which you can assess the risk of lending and disperse the money. So both payments and lending. So that's the other part of their strategy that they had. So, I mean, just quickly, this is how you develop a digital strategy, which has to be aligned with your business strategy. So their business strategy was to expand into the farming, into the agri segment, and have 5,000 more clients on board over the next 5 years. And hence, this is what they want to do in terms of their digital strategy. So a lot of banks don't do that. They just embark upon that. So that's very important to remember, especially if you are targeting SMEs. The second is you have a technology platform, but it's of no use if you don't have the data, which this can slice and dice, this platform can slice and dice. So you need to have a data strategy. Klitos alluded to it a bit in terms of what that means. It means not only having that data, but how do you structure that data? How do you structure it? And then more importantly, first of all, how you gather it even, because this non-traditional data is not easy. It's something new for banks. The data that banks had on top of when we worked with a few of you in 2008 and 2009 was your client base. It was like, okay, is he a doctor? Is he, which geographic region is he from? Is it a man or woman? Actually, some banks couldn't even tell us whether it was a man or woman. And so this type of data, but even that could be used very properly, but it wasn't being used. And you all are there, you know that. Bankers never really went into the database and structured that data. Today, it's non-traditional. So you need to, the data strategy, say, okay, where do you get this data from? First step, the data strategy says, who does the data belong to in terms of ownership within the bank? So you could have it, you consolidate it in one unit, you could have the SME with the SME segment, corporate with corporate. It depends on each bank, but that has to be in your data strategy, and who has access to that data. And third, how do you structure it? So again, is it by the SMEs? Is it by male, female? How would you structure that? Now the structuring depends on what insights you want to get out of that data. So that's the fourth part of your data strategy, the insights. So the insights, for example, I mentioned OBS in Serbia, of any bank in Pakistan who wants to go to the SME sector, the S sector, especially in rural areas. So you need insight into non-traditional data and using that data to get insight. So you need to see if the guy has 3 kids, 1 wife, 2 buffaloes. So what insights do you get out of this? And then he has this 4 or 5 years track record of selling milk in the market. You get all this data. So what insight do you want to get out of this? I mean, is that enough that he has a buffalo and 3 kids and a wife and he sells milk every morning? It's not. You need to then analyze that and derive an insight of how much he earns, how much he could earn, what are the markets he's delivering to, what are the other markets around his area that he could deliver to. And based on that, you can structure a product for that farmer. So this is your data strategy, which feeds into your digitalization strategy, which then feeds into your business strategy. So this is what banks should be looking at. And it's not a race of being able to say, okay, now we have, we've got this application and now we are able to, lend to so-and-so parts of the economy. Obviously, the low-hanging fruit are corporate employees and, that's happening even without technology. It happened, lending to a corporate employee has been going on for ages. So now you need to dig deeper into the market. You need to go from the 8% to 25 to 20%, 25%, and beyond of the SME within the whole SME segment of things. And also the lending, actually, from 7%, your portfolio should increase to 25% also using this technology. And it should be simple. And this is a huge opportunity. The other reason, even if you have the technology, even if you are sitting, and this has also happened in real life cases, and with a bank in Pakistan, I won't name it, we built their capacity, and Klitos was working with me on that bank, and they were ready to launch an SME product. And then I get a call maybe 2-3 months down the road that there are no takers, that we have these lovely products, but we've not really got much response from the SMEs. And so what we found out was the bank didn't tell the SMEs that they are now lending to SMEs. So unless you reach out and go out into the market and explain, because these are not very financially literate segments of the economy. We know that by now. And I'll come to that also. So the banks, the institutions have to reach out with these products and explain to them how they can access these products from these banks. And lo and behold, they had a lot of traction after that. Not a lot, still 7%, but more traction than they had before. And it went on with other products. They launched a few other products also, which are now quite well known in the Pakistani market. But what I'm trying to say is that even with all these tools, until and unless the bank or the employees or people like you, who probably are much better than the bankers were 20 years ago in terms of understanding the SME sector, need to understand the SME sector. They need to understand, okay, what insights we need, what type of data can we get, what type of products can then be developed based on the insights, and how do you structure these products? Because that's the other mistake. And again, I think Klitos alluded to it, and I'm sure Aamish would, out of his experience, that you cannot structure financing products or lending products or even deposit products for SMEs in a similar manner. Because all SMEs, even if they're from the same segment of the economy or cluster, operate differently in terms of their outreach to the market, in terms of their ability to manage that business. So their cash flow cycles are very different. So if it's a manufacturer, you can't say it's a 3-year loan, repayable every 3 months. It's not. You got to structure it. So that's something banks also have to get used to, structuring the disbursement of that loan according to the ability of that business to repay and generate cash flow. And I think there were questions on that cash flow. So that's how you work out the cash flow, based on historic, based on assessment, based on the gut feel of you guys in the bank who are now or should be very well versed with how SMEs, how entrepreneurs think and how they impact the economy. So that's from the banking side. Knowing your client, and don't forget that, or maybe I'll cover that in HR. So actually, let's move to HR. So HR has a big role to play. It had a big role to play in 2020, and 2008 and 9, actually, when we worked on banks. It had to convert commercial bankers into SME bankers. So that's what happened, right? And I think that's what I was talking about yesterday. They were converted, and it's not easy. If you're dishing out a $50 million loan and suddenly you're doing $100, it's a different cap. You don't understand why that's being done and what impact it has. So we've always been saying that we should have SME bankers. We need a new crop of SME bankers, like anything we've been doing. Islamic bankers, we didn't have Islamic bankers, then we started having them. Digital transformation, same thing. You didn't have these fintech platforms. Actually, should have mentioned that. We'll talk about that also. But then you have them now. So all these things evolve. Similarly, SME bankers have to evolve. Their bread and butter should be SME banking. And I think IBA and some other institutions are now giving your MBA in SME banking, which is excellent. But the SME bankers need to better understand the market and also better understand that the SMEs will not understand what you're telling them. These are people who are not financially literate, and especially the deeper down we go into the market. So this financial literacy has to be a big product in your product mix. It's not just financial products, it's finance and advisory products. Klitos again referred to this, and we've done that with banks, and I think Aamish, your bank is one of them. So training them into making sure that they're able to go out to the SMEs, to the entrepreneurs, and first of all, explain to them why they need to borrow from a formal financial sector. I think there was another question there, because they're not documented. There are other many reasons. So here, let me tell you that commercial banks or financial institutions are one player. So I'm not saying you can solve all the SME problems. You cannot. It is the ecosystem. And we all know that by now, right? So it's not, so if you're operating as a bank and you're the best bank and you want to target SMEs, but the ecosystem is such that it does not allow the SMEs to function properly because the electricity goes off every 2 hours, or that the tax guy comes in and bothers you. So that's not your headache, but it affects the work that you are doing. It is you. So the stakeholders, when we talk about, and the State Bank has convened them many times, all the stakeholders, these are things you need to discuss. You have the highest leverage because you are the ones that can then duplicate. Let's say it's an ideal environment and the taxation system is ideal and the government has conducive regulatory frameworks and the market is ready. Funding is what is needed, right? So there is where you come in. And that's where these skills that I mentioned have to play an important part. But as managers of the economy, again, I keep emphasizing that banks are managers because you allocate the funding for productive development. As managers of the economy, you need to make sure that all the stakeholders are working towards this conducive ecosystem. That is also your responsibility. It's not just banking. It's not just giving out the money. So these are the things you need to understand. And then coming to HR and KPIs. So if your KPI, now that you are an SME banker, and it took a lot of time to move the KPIs from corporate to, it didn't even happen for 3, 4, 5 years. It was the same KPIs. And I hope, I haven't been to Pakistan in 3 years. I hope it's changed because your KPI should not be that you have to dish out so much money. Your KPI should be that of the 100 rupees that you lend, 40 rupees or 50 rupees have to be to such and such segment of the economy, which is SME. So that's your first KPI. The second KPI should be that this 50 rupees that you've lent should have produced this impact. You should measure the impact. The impact could be creating jobs. The impact could be contribution towards GDP. The impact could be contribution towards export earnings, whatever. You need to measure that. And that should be your KPI. That's when you will be able to go out and target such clients. You look for them, actually. You look for this football manufacturer in Gujarat. Where is this guy who has this skill? And he can help me get a bonus. Because if I ask him to make 2 footballs, he's going to get $200 and I can hit my KPIs. So that's how your KPIs need to be structured. And that's where also in HR, you should have some sort of a orientation on how this financial literacy part is going to work. How do you impart that? How do you ensure your client are financially literate? Not only financially, but also able to manage their productivity, manage their management capabilities, their accounting capabilities. So all this is your responsibility. And the better you do that, coming back to risk assessment, the better you are able to ensure that the entrepreneur you're dealing with is much better in managing his business, the less the risk of your exposure, because you have more confidence. So the tiering pricing or the differentiated pricing can change even for the same borrower who you've lent at, let's say, 25% for 2 years. Third year, you can bring it down to 20% or 18% because he's done a good job or she's done a good job. So these are things which you need to bring in. And HR has a big role because, first of all, bringing into the bank SME bankers, making sure that they recruit. So there are certain skills which are required, one of which is understanding the SME sector. And they don't really have to be MBAs, by the way. I think we all know that also by now, right? They are people from industry. They are entrepreneurs who are now bankers, who were entrepreneurs. They don't have an MBA degree, but they have an insight into how businesses work. And they have an insight of what type of financial products are needed for this business to grow. And that's where your product development department can then build this. So thinking out of the box, because this is a segment which is, like you all know, not very organized. And they're not very organized, not just because the government hasn't organized it, it's because they themselves, entrepreneurs, we all know, are not, they're just focusing on their innovation. They're just focusing on what they're going to build. They don't even know how they're going to sell that sometimes. So linkages to markets, linkages to other sources of funding, linkages to maybe advisory services. This is the job of a banker also, SME banker. You may not be able to do all this yourself, but you can enable the entrepreneur, because the more you enable that entrepreneur, the more you are mitigating your risk of exposure to that entrepreneur. It's not just the data and all that, it's also enhancing the ability of an entrepreneur to run his business or her business. And I think that's the responsibility of the banker, because end of the day, you're responsible for the depositor's money, right? So you've lent it to this entrepreneur. You better make sure that he returns it or she returns it. And you have to make sure that the business is running properly. And obviously businesses have problems. So the next part of what you need to understand is, how do you do workouts? How do you then, you don't go and foreclose, you go and help the business understand why this business, which was doing well for 2 years. So we all know what happened in COVID. So you don't just recall the loans, you actually help them. And I think State Bank of Pakistan did quite a lot of that in terms of, is it working capital? Is it rollover, loan repayments? What is needed? So you got to understand how to do that. And just talking about this COVID packages, globally, every country in the world had them, by the way. And I was sitting in Dubai, that's where I'm based right now, and I used to get calls from Indonesia and from Malaysia and from Pakistan. Entrepreneurs asking, okay, so there's these packages being offered by central banks. Some are giving, payroll benefits, some are giving working capital. So which one should I take? So they didn't even know what part of that package or what product of that package they needed. So again, the banker can't just say, okay, we have these 4 wonderful products, come and get them. You've got to see, okay, you guys running a restaurant and it's closed now, and you have 4 employees and you can't pay them. So maybe the payroll package is what you need. You have factory manufacturing stuff, and there's raw material stuck at the port, and his finances are blocked. So maybe working capital is what he needs. So it all depends, but this is something the banker has to tell the entrepreneur. From the old days, when the businessman said, okay, come, I need $100 million loan, we said, okay, we'll give it to you. You should ask, why do you need that? Why do you need $100? What for do you need it? And perhaps, no, maybe you don't need a loan. Maybe you could get a lease this equipment. Or maybe you should look for equity, actually. This is not something that you should burden yourself with, leveraging yourself. This is the type of advice. So this is the skills, especially SME bankers. This should be done for all bankers, especially SME bankers, because you're dealing with an entrepreneur who, with the slightest mistake, you can make or break. If you give him the wrong loan product, for example, and the wrong tenure for repayment, so the guy might collapse in a year. And not because of his fault, because he got the money, that's his victory. He said, oh, I'm going to get $100 from this bank. But though you're supposed to say, what are you going to use it for? How are you going to use it? How are you going to repay it? But add your sense, and only you can add your advice, only if you know the nature of that business and suggest that, okay, perhaps this is the product you need. So these are skills you need to build, and I think HR should be looking at them. And of course, we all need commitment. I mean, the SME is not easy business. I think I had a brief chat with Aamish yesterday. You have to be committed. You have to be committed in anything you do, by the way. Everything you do, you got to be committed in terms of making sure that it works. There are a lot of excuses that we have the products, we have the money, but the government regulatory process is not in place. It never will be in place, by the way. You will never have, again, experience. I said this is a talk. You will never have a conducive regulatory framework for anything. We're talking about fintechs in 2022. There's no conducive regulatory framework. But innovators and entrepreneurs, they will continue to innovate entrepreneurs despite regulatory frameworks. And they need support of institutions. So the other thing bankers can do, and I think you are doing it on this State Bank forum, is align with these entrepreneurs and bring these problems to the forefront and say, okay, they have the funding, the access to financing problem is resolved, but this tax issue still needs to be resolved. This environment and sustainable, again, we talk about there's so many things, adherence needs to be spoken about, and you need to have some policy about it. So you've got to help them with it. Commitment, skills, KPIs, financial literacy, digital strategy, data strategy, risk assessment. So these are components of a good SME strategy, let's say, if banks want to penetrate deeper into the market. If they have, look, the issue is, again, not just Pakistan, a lot of banks, they have easy money coming to them, and it's because the KPIs are profitability. You invest in T-bills in Lebanon, you invest in T-bills in Jordan, in Egypt, and you just sit pretty. And you get your return and you get your bonuses, but that's not your purpose. That is not the purpose, and that's where commitment comes in. And why do we see, countries like ours, rich in resources, in talent, in bankers? Our bankers are doing amazing work outside Pakistan. Maybe doing some amazing work in Pakistan also, but that'll be proven if they go to the 20% of SMEs. But outside they're working in the SME segments, they're working in various segments. So we have all this. But I think the commitment and our consistency to make sure that they are getting the message. Now, today again, we are in 2022. So a lot of talk, and bankers are at the in the firing line of that, because again, managers of the economy, distributors of finance, which is a huge leverage in any institution. And that's why you've been able to enforce corporate governance, you've been able to enforce so many other things. Well, unless you do that, you will not get funding. So you have that leverage as bankers. So today we talk about sustainability. So sustainability of green banking, now you have the guidelines as well. And I've actually done a workshop for a few boards of banks in Pakistan in the last couple of months on seeing how boards can provide oversight to this green banking framework that the State Bank now wants to be implemented. So these things, so it's still evolving, obviously. And why boards need to provide that oversight? Because nothing is going to happen unless the board understands what is sustainability, what is green banking, and how can a bank adhere to the standards of green banking or reach those standards over a period of time. So roadmaps are very important. How are you going to get there? I think that's what the State Bank has asked for, roadmaps. But each one of you has to explain to the businesses that you are lending to. Now we're talking about SMEs only at this stage. What is sustainable banking? What is green banking? Why they should make sure that they're adhering to certain standards on the environment, which should be enforced. We have standards in Pakistan. We've had them for maybe 100 years, I think, but they've never been followed. We've always had standards on, wastewater treatment plants in these textiles, never adhered to. I mean, I'm talking about 90s when we financed a lot of textiles and cement companies, but they weren't adhered to because no one really bothered. And you know the reason for that. But today, the world is looking at us. So this technology is not only for you to lend to SMEs. This technology is also a watchdog in seeing, okay, child labor, Pakistan, cotton picking in Uzbekistan, child labor, let's boycott them, So this news spreads. You had child labor for Pakistan many years. Device used to buy from you and, all these big names. No one knew because they were hidden in some factory in Korangi or in Lahore or wherever. Today, you know. So you need to make sure that these things are not happening. So that's what you need to explain, but only if you understand yourself. Sustainability means sustainability of that business as well. That if today you're making, back to my favorite football manufacturer, you should continue to make that. You should not stop because there was some sanction on you because you used child labor or you used not good quality material. So you have to remain sustainable. And the bank needs to ensure that they are remaining sustainable because only then you have a client. If your clients are unsustainable, you'll be looking for new clients every year, which is not a good thing for a banker, right? You need to have a client with a track record. And that can only happen if you're sustainable. And that can only happen if you, as institutions or banks, are funding sustainable businesses. So you need to make sure the businesses you are exposed to are sustainable, adhering to the SDGs, and so on and so forth. And you're being watched. And, we get in all these lists. Sometimes they're gray, sometimes they're black. I haven't seen any white yet. But it's because of these reasons also behind the line. But so get out of that. Make sure you are funding the right type of business. You have the right KYC. You have the right product mix. You have the right impact in terms of sustainability, in terms of economic growth. And this has to come from the bankers. I'm addressing bankers right now. I'm not talking to SMEs. You've got to lead the way because you have that leverage. You will not lend or should not lend to a company. And this was a question actually asked by one of the board members in one of the banks. That doesn't mean to stop lending because inevitably all your portfolio, most of it right now, no one ever thought, it doesn't mean you stop lending. You need a roadmap because you cannot put on the switch and say, okay, we're not lending to businesses who are polluting the environment. You got 50% of your portfolio, these big banks in energy products, which are polluting, so you can't get rid of them. What you should be doing is explaining to them or helping them build a roadmap, how they can reduce these emissions over the next 5-6 years, and how the bank will help them in doing that, and why the bank is helping them. Because after the 5th year, if the emission levels is not below whatever has been agreed upon, the funding will stop, or things like that. So that's the leverage you have in ensuring this climate change. And, it's a big thing in Pakistan, and I think one of the few countries which now is on the map. But banks have a huge role to play, but only if they understand what is meant by green banking and sustainability. And since we're on this topic, just a little misnomer, which I also tell people, the government in Pakistan and even in Dubai, we always talk about reducing emissions. If we reduce all the emissions in Pakistan, we don't have anything being emitted it reduces 0.00001% of the global emissions. So we're not a big emitter. What we need to do is mitigate climate change because of the emissions of these huge countries like India and China and the US and Russia, that is affecting our climate. So it's not emission reduction. We should focus. I mean, that's the easiest thing to do, but it's climate mitigation. What policies and strategy do we have to make sure that the effect of the rising seas, not because of our fault, but because of the fault of our neighbor, because of the environmental chaos created because of their activities, we'll get huge tidal waves. Again, I'm just giving you an example on Karachi. So how do we mitigate that? What are we doing for that? So this is what our climate strategy should be. I mean, this is just aside. This is to do with the climate ministry. So I think I'll just stop here. I'm sure there are questions, although I don't see any on the screen. I just see those 5. I may have missed a few things. For questions. Whether if you want to read them out, if there are any.
I can read these questions for you, or I can share them. I have this
okay, I can read them
document. Okay,
no, I can read them on the screen.
Some of these have already been answered. I can read them to you and you can choose which ones to answer right now. Can you give some other examples of innovative form of collateral other than receivables?
Well, secure transactions and securitization, a bunch of SMEs, and you can collateralize and lend to them against that collateral. So there are quite a few of them. And I think Klitos already mentioned quite a few of them.
Exactly.
This question on informality, I see Shahid Hussain Javed. I didn't understand this question. Or the role of informality in productivity enhancement. So look, I don't know. I mean, what I'll say is that obviously a vast majority of SMEs are in the informal sector. And there's a reason, because this conducive environment isn't there. And again, bank lending can help bring them into the formal sector. One of the players is you. The reason we would want these institutions, these enterprises to be in the formal sector, because being in the formal sector, they're not measured. And there's a saying, if anyone has worked in M&E, that if you can't measure it, it's not been done. So if you made 10-foot walls, you can't measure it, they've not been made. So you need to capture the productive work that entrepreneurs do and make sure that it is counted towards the economic impact of the country. So that's why they need to be formal. I know there are issues of tax, and there's issue of tax, my take on that is you have to pay tax. But the thing is, you've got to then ask where it is being used. So we know it's being used today, but that's not where we want it to be used. So we have to ask those questions. If we just keep holding back our tax because we know it's being misused. So formality brings taxation and other issues also, but it brings a lot of benefits. Your borrowing rates can also decrease, by the way. That's another way of doing it. Okay, do you believe banks pay enough to hire MBA or That's for your bank to answer. Corporate around do something. So I don't know. So KPIs, it's all on the KPIs. This is how you need to structure the KPIs in a manner that you can attract SME bankers, because it is a different type of banking, and it's I would say more difficult in the sense that it is more difficult because of the banks are not used to it. The big banks are not used to it. And talking about that, I forgot to mention fintechs. Now, fintechs, when we talk about digital strategy, 10 years ago, 15 years ago, Citibank and BBVA and DBS, these big banks had their own innovation centers to make innovators and develop these platforms. You don't need to do this today. Today, you have enough platforms that you can go out and leverage and bring to, use them using your banking platform. And I think HPL and quite a few banks have done that already. The trick there is how do you partner? And that's where we've provided a lot of advice that, okay, you have 20 lending platforms. So how do you select them? Which one is the one that you need? Again, it depends on your business strategy. It depends on the segment of the market. It depends on the size of the institution that you are in and the geography that you are lending into, all of Pakistan or just in the Punjab or whatever. So depending on that, your strategy of who you need. And then the other part is how do you partner? So do you go and buy the platform? Do you go and partner with them and do a cost sharing, revenue sharing, or do you give them a commission? So these are things that the bank has to decide. It's not just going and signing an MOU or an agreement, but how do you partnership? Because you should look at any partnership as a long-term partnership, and that is workable. So that's why it has to be given a lot of importance. And that should be in the digital strategy, by the way. Which fintech do you choose? Which one do you choose for KYC? And on fintechs, a word of caution, many of you must be in the digital space, biases. And I don't walk away or out of any conference or event without mentioning two things. And I'll mention them here also. Is responsible lending, responsible finance. So that's something you have to be very conscientious of, that you've got to make sure that you are doing whatever you're doing in a responsible manner. So that's where financial literacy comes in. So you're not pushing a product which the person doesn't understand and doesn't know how to repay. So that's irresponsible. Similarly, your innovations have to be responsible. And we have seen over the last 10 years and ongoing, and maybe even today, if you pick up the paper, you'll see at least 6, 7, 10 instances of companies which have used technology irresponsibly. Facebook got caught, but after that, everyone is being caught. Wells Fargo was a very good example. So you buy this technology, you partner with this, but you did not do your due diligence, and the result of the insights and the data analytics of these platforms is such that you are getting biased conclusions, and then you are lending bias. So you all know what happened to what was the Apple joint founder? I'm forgetting his name.
Steve Jobs.
Anyway.
Steve Jobs.
Huh?
Steve Jobs. Steve
No,
Jobs.
the other guy, Wozniak, Steve Wozniak. So he and his wife had a problem, right? I don't know if you know, Bank of America, a robot assessed their ability to borrow. So the husband got $100, the wife got $0. Same salary level, same education, same institution they work. And then he sued BOA that this is biased. So responsible innovation. Responsible innovation means that, all these are algorithms, right, within the platform. So this churning of data and bringing you conclusions is done by algorithms. So those algorithms can be biased even when you're hiring. So HR uses a lot of algorithms. I'm sure in Pakistan you've started also of hiring. So they've been discovered that there was bias in the US, that less females were being hired, for example, or less blacks were being hired, because the person who made that algorithm was biased. So the algorithm was biased. So responsible innovation, responsible use of technology. Use means when you as a bank buy a technology, make sure that the algorithms are not biased. Question them. Question that the results that you're going to get. So that's something that you are responsible for. And then responsible banking is what I explained, that make sure your client understands what you're doing. Non-financial, I think we've covered that a great deal. If we could listen something from Alpha, yes, we will. I'll just hand it over to him. I think I've run out of my time. Sadaf, is that it?
Yes, we have received few questions and comments in chat as well. So Aamish, will you be responding to those, or should I read them out right now?
Yeah, I can respond to them,
okay.
And maybe I'd request Kaiser Saab and Klitos to pitch in wherever
they.
Okay, I'm sharing those as well on a Word document, so you
I can see them. I can
great.
see them, so that's okay.
Great.
We have already shared with Aamish Saab as well.
Okay.
I can see.
So first of all, thank you very much. I think it was actually a great learning experience for me to hear so many good things from Klitos and Kaiser Saab you. So it's a huge opportunity, and believe everyone participating would also have similar, opinion about the entire session. So what I would try to do is that, yes, I have a 2-page slide, but I would like to cover that at the end. The reason being there are so many questions. So let's first try to address them, and let's see where we go from there. So I take on the chat questions first, because there are a number of them. So if we look at that, we start with Mubashir. Okay, so I'll go in the reverse order. Can you tell us how SME database is maintained in other countries? And also there was a question about not having enough information on SMEs in Pakistan, that being a problem. So my 2 cents to it is that, yes, this has been a pain point for a very long time, and we've been talking to a lot of people concerned, including organizations like SMEDA, different chambers, commerce, regulator, to come up with a strategy on building a database where the entire SME space can, register themselves, and bankers can have access to the overall database of SMEs or SMEs operating in the country. But my personal opinion or bias, being an SME banker, is that we are not talking about millions of SMEs being expected to be onboarded in next few months, that we need a huge database to identify what SMEs we are talking about here. If we talk about the banking sector, and I didn't come to the exact numbers as well, there are 4 million SMEs, and less than 4 or 5% of the SMEs are actually in the SME space, or SME financing or SME banking is available to them. So what we are talking about is a huge space of unbanked SMEs being out there, right, left, center, around you, wherever your office is, wherever your home is, wherever you go for shopping. There are like hundreds of SMEs. So we're not talking about millions of SMEs being target market for individual relationship managers or individual teams working in SME. What we are trying to say is that there are a lot of opportunities very close to you. So yes, in an ideal situation, in an ideal world, database will help in growing the SME business, but we have not reached to a point of saturation in SME banking right now, where database would be the only way to market or approach the SME clients to be marketed. So my personal opinion would be that till the time we work towards formalizing or having a database of SMEs, which is in process, we should still not give up or wait for a database to come in to support us, but actually look around us, and we'll find a number of opportunities available. Then there's a question about devaluation factor on SME limits, and devaluation of currency has impacted the overall, SME definition hasn't changed over the last few years. So the question is twofold. One is about the need of the client in terms of SME devaluation of foreign exchange, and how has that impacted to the needs of the client, and also on the definition not being changed. So taking the first question first, I think again, as Klitos pointed out, and as Kaiser Saab also rightly pointed out, that the role of bankers or SME specialists is very important in the entire situation, because no one apart from the banker himself would be able to assess the true need of the client. And if the need has actually gone up, if an SME client who was able to manage his working capital in 10 million rupees probably a year ago, and we believe that now 10 million is not enough for him, and probably he'd be needing 15 million of financing to meet his working capital requirement, then the decision on whether to lend up to 15 million or not is with the banker. And if we truly believe and feel that the need of the client is genuine, he actually needs 15 million to finance his working capital requirements, then the entire decision-making process is pretty simple, and it's in the hand of the banker. So we cannot say that devaluation factor or devaluation will not impact an SME. It will impact an SME. And the whole debate we are trying to have here is that though the additional requirement or the financial requirements of the clients are not being met by the financial institutions, by the formal sector, and that's why they have to look for other avenues, look for informal sector, look towards loan sharks or creditors to actually meet their additional requirements or meet the requirements that they genuinely have. And if we as bankers truly understand that what SME needs are and meet these requirements, I think there would be very little in terms of challenges that are being mentioned here. For example, the additional limits or the definition, because definition again just give us a guideline on what is defined as SME. We still have 4 million SMEs defined as SME businesses. So what will happen if the definition change? Probably the 4 million space will increase to 5 million or 5.5 million, but we are not able to cater to the needs of 4 million SMEs today anyways. So why are we even considering the change in definition being a game changer or a value addition for us to be able to perform better or meeting the client's needs better? So again, I think these are questions, or these are constraints that we do highlight, and I call them SME paradoxes that we have in our mind, and we keep on repeating themselves just to reassure ourselves that our lack of involvement in SME business or lack of interest in SME business is not purely because of our decision making or our way of approaching these SMEs, but actually because of the inbuilt challenges in the policies, or inbuilt challenges in the definitions, or inbuilt challenges in other factors that are there around us. So my understanding of the whole process is pretty simple, and that is that there is a huge opportunity in the space, and whatever we are talking.
Aamish, if I can, sorry for interrupting, just to add something here about the definition. The definition is not a definition just for countries. It's a global definition. And the reason is because we want to compare apple with apples globally. So if we have a devaluation in one country, for any reason, what we need to do is to go and assess the customer financials and reassign the limit to the customer. Not trying to change the game, as you rightfully said, because of the devaluation of the definition. It's because what we need is to have a common understanding globally that when we are talking about SM or small medium enterprises, we have the same definition globally, and we adjust internally within bank policies how we define that, and we keep the track over there. We don't have to change the definition, the global definition, to suit our needs, but we can do fine-tuning internally with the bank to serve our needs, to serve the bank needs, actually. This should be the approach.
Thank you, Klitos. Thank you. So again, as Klitos highlighted, that it's not necessary that we redefine the definition of SME over and over again. Some tweaking would suffice the purpose. So just taking on a few more questions and then coming to the two slides, which probably I believe will address a few of these questions as well. So one of the question is that the HR constraints, or with the increasing focus on SMEs, how would the banking sector have enough HR experts in SME businesses, and how will they be able to meet the demand of the market? So again, we've talked a lot about SME specialists, HR training, learning, and also use of technology. So what we need to keep in mind is not just about the resources, human resources being engaged on ground, but also what we are talking about, or what at least Klitos and Kaiser talked about, and I'll try to talk about it a little more in the slides that I have, is also that we're not just talking about that the way or the approach to SME banking needs to be different from the corporate banking, which effectively means that we are not talking about just additional resources being deployed to cater to the increasing need of SME businesses, or increasing focus on SME business. It's about doing things more efficiently and effectively. Which also means that we use technology, we use creative and innovative business models, sales approaches, we use multiple channels to approach clients, and we ensure that our experts that are there in the market right now, one, they keep on creating new SME experts over the years, and also we engage technology and product development teams in a way that a lot of our workload on the SME specialist front-end people gets reduced. So the idea is not to actually increase the SME experts from, say, 10 to 5,000 in next 5 years. It will not happen, and it hasn't happened globally. It will not happen globally. So the objective is to gradually grow the expert base, SME expert base, and supplement that with products, with technology, with decision-making mechanism, which is enabled in a way that with fewer resources, we are able to deliver better. So it's about HR resources and also other resources that a bank can provide to improve the SME banking experience over the next few years. Another question is about demand supply side constraints that SMEs are facing. So before I get to the slides, which will cover a few of these points, I would just like to take on this one question, and then probably after I'm done, I'd share more details. I think what we haven't covered here is we've talked a lot about the SME constraint on the side of the bank, what banks think, how are banks constrained to service the SME clients, and a number of challenges that SMEs are facing or banks are facing when dealing with SMEs. But what we've missed is that over the years, there has been a lack of trust that has developed between the SMEs and banks as well, because SMEs are not really comfortable coming to banks now. Because of various reasons. So naturally, there's lack of information and knowledge that has reached them over the years. They have developed a thought process or a mindset where they consider banks as being a source of a huge information database gathering that will later be reported to different regulatory bodies and authorities. So there are a lot of misconceptions about banking, and there are a lot of misconceptions about bankers in the minds of SMEs as well. So there are definitely some demand side constraints as well. They are not willing to risk their collateral into banking space, because they believe that the intervention of banks or the mortgages of banks would eventually lead to losing their assets. So all in all, I cannot weigh a demand side or supply side constraint being a major factor of not contributing to the growth in SME business sector. But I think what's important is to realize that both sides need to come forward, take steps that will gradually improve the overall penetration in the market for SME space or SME market by the banks. And my next very topic is about the penetration or the opportunity that is there in the global space or in the local space. And for that, I would just share two slides with you. One slide would just cover about a bit of global penetration numbers, and the second slide would just briefly summarize what we've been talking about since the start of this webinar. So if you look at this first slide, this tells us about the contribution of SMEs in the key factors like total GDP, non-agri employment, and exports of any country. And on purpose, I've just tried to include some regional countries into this comparison so that it remains a bit more relevant. So if I talk about the contribution in non-agri employment, which is the employment on basically manufacturing and trading sector, excluding the agri sector, we see that Pakistan's SME has very significant contribution when it comes to generating employment. If we talk about the total GDP contribution, it's 38% in Pakistan, with 40% in India being in Philippines being the highest, Vietnam being pretty good, but Pakistan stands amongst the top of the countries when it comes to SMEs contributing towards the GDP of the country. Similarly, Sri Lanka, if we talk about Sri Lanka, it has around 52% of the GDP coming in from SMEs. Naturally, there are a number of SMEs are much more as well. And if we talk about exports, again, excluding countries like India, Pakistan still stands tall amongst the competitors, other countries, and the contribution of SMEs in the export sector is significant as well. But having said that, the further statistics shows that whatever the green circles that are reflecting basically the contribution of different sources of financing for the requirement of working capital they have. So if we talk about Pakistan, only 9% of their financial requirements are met by financial institutions, while 80% are met by their own equity. The remaining gap of 11% is met by investors, informal sector, credit from their suppliers. So supplier credit is part of that. While if we talk about countries like India, where almost 27% of the needs are met by the financial institute or the formal sector. Similarly, in Thailand, it's up to 52%, which is extremely high. So there is a huge opportunity, a huge gap that, as we talked about, where the SMEs are completely dependent on their own equity to do various sorts of financing and financial investments, or they have to go out in the market and get funding as high as Kaiser Saab mentioned, 100% a year, which is much higher than probably what banks are offering at probably the highest margins that are available. Even then, it's much lesser than what the informal sector would offer them. So there is a huge gap available, and there's a huge disconnect between the needs of SMEs and the financial institutions coming forward and meeting these requirements. If you further look at the opportunity in Pakistan, there are almost 4 million SMEs in Pakistan, and only 5% of them are banked. So almost 95% of the SME sectors of this 4 million SMEs are out there right in front of us, where we can actually consider finding an opportunity of financing or banking. Even if we don't want to finance, we can just open an account and start banking with them. We can at least bring them on board the formal banking channel, so that maybe 3 years down the line or 5 years down the line, they can become bankable for lending as well. Similarly, if you look at the financing needs, there is around 5.5 trillion rupees of financing need for these SMEs. While if you look at the last point, only 525 billion of this 5.5 trillion is financed by SMEs, which is close to 10%. So, which is close to 9%, in fact. And this has grown 10% since 2018. So 45 billion of financing to SME is actually a growth number of 10% or growth of 10% from 2018. And during the same period, the private sector financing has grown by over 24%. So we can see that even in today's time, when Kaiser very proudly said that there are a number of SME bankers now who are ready to take on this challenge of SME banking, but I believe that there are still a lot of gaps there, and we still need to go a long way if we want to actually ensure that the growth within SME financing space or SME sector, banking sector is on the similar tangent or similar level as private sector financing as a whole. And only, as Kaiser has been mentioning over and over again, that only 8% of the total private sector financing is in the SME sector. All of this combined tells me three things. Number one, there is a huge opportunity. Number two, this is a neglected sector. Over the years and even today, we have not been able to understand this sector, and we've not been able to actually look at the opportunities from the framework or from the eyes which will enable us to actually capture this opportunity that is there. And thirdly, and most importantly, I think it's high time that we realize that we probably need to finally draw a line between commercial corporate financing and SME financing, because this overlap and gray area, as Klitos highlighted and Kaiser highlighted, this gray area, till the time it exists, we will not be able to identify the opportunities in the right frame of mind and right framework, and we will not be able to cater to the needs of the clients unless we actually draw a very clear and straight line between between commercial corporate financing and SME financing. And I go to the extent of saying that sometime probably we as bankers need to think that there are three forms of financing that are there broadly, I would say. If I talk about commercial banks, one is consumer banking, where we focus on lending to individuals. Then we talk about SME banking, and then we talk about commercial and corporate banking. So commercial and corporate banking, as we've been talking about, is where we have robust, complex transactional structures, robust credit assessment models, very detailed assessments. But at the same time, on the commercial side, when we talk about it, we have a lot of centralization, we have digitization, we have automation, lack of in terms of requirements. I'm not talking about lack of documentation from the client side, but lack of documentation from the end of requirement from the bank. And yet we are able to or willing to take the risk on consumer side, believing that that is SME. But my question always remains to whoever I interact with, that how is it different that SME banking, consumer commercial banking, and consumer banking, except for the size of the loan and the risk changing inversely, corporate commercial being considered as the lowest risk and consumer being considered the highest risk, what is changing? What's the fundamentals behind any lending opportunity? And the fundamentals are pretty simple. Fundamentals are, we need to know or understand the need of the client, what he needs in terms of financing, and on the other side, we need to understand the repayments. How is he going to repay us the loan? So these are two fundamental basic questions that are asked whenever we are lending to anyone. So when it comes to consumer financing, we are pretty open in terms of documentation, not being the only available proof for assessing the repayment capacity. We look at a number of other things. We have scorecards very actively engaged there. We have scorecards very actively being used there. And on the commercial side, we are very reliant on the financial statements. But in SME and commercial, we are still not sure that whether we have to go to the same extent as we are going to SME and as commercial or corporate side, or whether we want to go as lenient as commercial consumer banking side. But my simple take is, why actually choose side? Just draw a line and come up with a specific framework for SME financing, for SME banking, that will benefit the segment as a whole. So what are we waiting for? Probably it's the high time that we actually establish a specific separate platform or framework for SME financing, where it is only focused on SME banking and SME financing, without actually complicating things with commercial, corporate, and going as lenient as consumer financing debate. So with that, there are very simple 5-point agenda that we've been discussing throughout this webinar, and I've just tried to quickly summarize everything. So if I summarize everything, there are 5 basic pillars that we can come up with, and the first pillar is basically customer acquisition. If I talk about customer acquisition, we have talked about differentiated product and service proposition. So the first foremost important thing that we need to understand is that we cannot function in SME financing space, SME banking space, unless we accept and realize that we need to have differentiated product and service proposition for our SME clients. We cannot service our SME clients with the same product suite that we are serving to our commercial and corporate clients. So we need to be very clear and focused that the product suite and the service suite that we are offering to our SME clients need to be very, very different. Secondly, we need to understand that collaborations and partnerships have a very, very important role to play when it comes to SME customer acquisition. We cannot sit back and focus on models like commercial corporate banking, where we evaluate every individual customer on its own, where we talk about well-known clients who are known to the entire industry, and us being able to assess them based on market checks and the financial statements and the market news. That is not how it's going to happen in SME space. We need to be more hands-on when it comes to SME. We cannot just rely on market news or information, because the size of the client is such that they're not known to the entire industry at all. We cannot ask about a client sitting in Faisalabad or Multan or Lahore from a client sitting in the same industry in Karachi, because they would not be known. Unlike commercial and corporate entities, where they are large corporate or commercial entities known to the entire industry, there we, without partnerships, on standalone basis, we have our ways and means to communicate and assess individual clients. But when it comes to SMEs, we have to focus on a lot of collaborations and partnerships with different corporates, different organizations, different institutions, different chambers, and we need to get feedback or information from these collaborations and partnerships to ensure that we have the right customer acquisition strategy and right coverage strategy at the same time. Then we need to be very clear about client engagements and cross-sell opportunities. We cannot avail or do the right customer acquisition mix unless we remain very closely engaged with our clients. And also, we should be very clear that SME business is not just about lending. SME business is not just about financing. SME business needs to be beyond that. SME business needs to be about SME banking. It's about the payments, the collections, the bundles that were talked about, Klitos, personal and commercial transaction being merged together or being bundled together in a way to get the right opportunity. And then we need to understand the needs of the client. We need to, again, I've been repeating this in a number of conversations that I've had with different people. We need to, for once, think of ourselves not as bankers, but as financial consultants. So first of all, what we need to understand is that unlike corporate and commercial clients, where we have always considered ourselves as bankers and as people who have been mitigating risk on behalf of the bank and not mitigating risk on behalf of the client, reason being we always assess the financials, the risk from the perspective of safeguarding our interests as bankers. Here we need to go a step further. We need to understand that we need to not only safeguard the risk of the bank, we also need to act as a financial consultant and advise these clients to safeguard their risk as well. And as long as we'll keep on acting like that and we'll be safeguarding the risk of the client, SMEs, we will indirectly or directly be safeguarding our own interest as bankers as well. And then most importantly, we need to keep on creating SME specialists Kaiser Saab has been mentioning this a number of times, but I still feel there is still a dearth of SME bankers, specialists in the industry, and there is still a huge room of growth when it comes to SME specialists. Then if we talk about digitization and technology, first of all, leveraging technology for data risk assessment and risk management is extremely critical and important. I think we've talked a lot, and there cannot be less emphasis on this point than anything else. So if we want to do this business right, it cannot happen on individual underwriting standards. The bulk or the volumes that we have coming our way with different schemes, different initiatives, all banks being active, the focus of the regulator and the government on this space, we cannot do justice to this segment, or we cannot justify individual underwriting mechanism. We have to leverage on technology for risk management and risk assessment both. Then we have to enhance our outreach through digital channels. So we cannot have one-on-one RM to customer relationship based marketing strategy only. We have to go beyond man-to-man interaction, individual-to-individual interaction. We need to enhance our outreach through the digital channels. We need to automate the digital client onboarding journeys. This is very important. Even today, if we underwrite a credit, it takes a huge time to basically onboard a client. So the entire journey of onboarding needs to be digitized as well. We cannot have the traditional methods onboard where a number of documents are prepared manually, then signed manually, then checked manually, then limit onboarded manually, then transactions happening manually. I'm sorry, but if we want to actually gain volume out of SME business space, if we actually want to do justice to the opportunity on the table, we have to automate the digitize the client onboarding journey as well. And lastly, but as Kaiser Saab briefly touched upon this, we need to make digitally enabled payment and connection channels. We have to have digital enablement on payment and connection channels. It cannot happen that we do financing to a client through digital onboarding, through digital assessment and technology, and then let them do their transactions through checks and through traditional methods. Today, it is the foremost requirement, especially keeping the cost of transactions in mind, that we have digitally enabled payment and collection channels. No matter how many channels we can open, we need to open a number of channels for digitally enabled payments and collections. I would quickly just cover two more pillars because I know I'm over time already. So now borrower risk assessment, again, we've talked a lot about this. Kaiser Saab, Klitos have talked about this as well. We need to step away from conventional corporate risk assessment, and we have to go towards obligor scoring process, digital risk assessment tools. We cannot function by the conventional corporate risk assessment method, and documentation requirement and ability to handle large volumes is also important. And that brings me to a point where there was a question about documentation gaps, lack of bookkeeping, lack of managerial skills and management skills, etc., etc. So my take on this is very simple. There are two types of documents that are required. One are regulatory documents or regulatory requirements, and the second are requirements that we have developed over the years as credit experts, as SME bankers, or as bankers as a whole, which we feel are very comforting to us. Having those documents would actually ensure that we are underwriting risk in a very well-informed manner. So those documents that traditionally for commercial and corporate relationships were considered as documents that satisfy our underwriting risk appetite, but these documents cannot be standardized as the documents required for underwriting SMEs as well. Whatever is required by regulator is very basic. Regulator or the policy, I'm sure, within the banks do not go beyond a certain basic documentation framework and documentation requirement that's required. So beyond whatever we want, that is because we haven't been able to come up with these scoring models and these technology platforms and these collaborations and partnerships and differentiated product propositions, since we haven't been able to develop a separate framework for SME business, SME banking. Thus, we are still stuck with a lot of documentational requirement from the conventional framework that has come with us when it's applied on SME financing. And thus we want to do away with these documentation. And once we do away with this documentation, we realize that to assess our risk, the documents are not the only source that's available. There are a zillion of other resources available for us to be able to understand what's the financial health of the client. Someone also said that what is the best way to come up with a cash flow with 95% certainty, confidence interval. So statistics merged with finance, which is very creative and very good. But at the same time, what we need to understand that SME is not that complex. SME is very simple. So if we talk about consumer banking, we just take a salary slip and issue them a credit card. I'm not saying just get a simple document and extend a loan to them, do some due diligence, but that due diligence doesn't with documentation. The due diligence can come from multiple other sources that is available to him. And financial health is not just judged by a chartered accountant, assessing the financials of the client. There are other sources like bank statements being available, and if the transactions are happening in the individual account of the company, the account of the individual owner of the company, and still, if we are sure that these are business transactions, what we are concerned is about the financial health of the company. And if the financial health is okay, if there are the transactions appearing in the individual owner of the company are healthy enough to give us comfort, then let's draw that comfort. So my suggestion would be, for SME, we need to think simple and we need to keep it simple. We let technology do the complex decision making. We do the product team do the complex decision making. We let the partnerships and collaboration teams do the tough and complex structuring, and we focus more on simple ways of assessing a client. We go back to some basic assessment tools and we do some basic credit assessment. And lastly, but not most importantly, we need to develop risk acceptability, some standard risk acceptability criteria, a hybrid model of assessment where some scorecard model plus some basic criteria, acceptability criteria should work, and we should onboard clients with much more rapid pace digitally, preferably if possible. And that's what's going to change the game as a whole. Then I also, I think briefly this was touch based by Klitos as well. It's about portfolio monitoring. We need to come out of the thought process where every relationship manager will be engaged and will be on top of every relationship, because those were corporate and commercial relationships. One relationship manager had a maximum of 15, 18, 20 relationship to manage. Here we are talking about 50, 70, 80 relationships per relationship manager. Now, if we expect him to manage every individual relationship and be on top of every individual relationship, that might not be possible. So that's where the portfolio approach comes in. It should be where our MIS and analytics should be strong enough to predict trends, to monitor portfolios, to highlight flags, to be able to feed the information to the client and to tell them what exactly is happening in his or her portfolio. That's what true MIS and analytics is. MIS today, how it's functioning is, most of the time, a relationship manager is asked to provide certain information, and once he provides the information, he is then questioned about why that overdue exists. So we seek information from the same source and seek answer from the same resource. That's not MIS. That is, I don't know what to call it even. But MIS and analytics is where systems smartly assist the relationship manager or the portfolio management teams about the trends, about the portfolio health, about the portfolio flags, and they tell us what's happening and what's not happening in the portfolio and what to do and how to do it. Similarly, using data and analytics for proposition creations. I've used the word proposition instead of products because it is truly propositions. So, and lastly, and most importantly, it's about collection and recovery setup. ये बहुत ज़रूरी है, because when we talk about collection and recovery, and we talk about and we bundle this with a lot of 4 or 5 other points, we are saying that this is a space where we need to base our assumptions or base ourselves on digitization and technology and product proposition, etc., etc. So then there needs to be set up of teams who actually are following the analytics and analytically generated MIS flags and trends and taking action onto the existing portfolio. That's very important. So again, it's important that we continue to continually be engaged with the client on the portfolio level and not on the individual level. That's important. And lastly, I think there's a reshape of mindset that's required. I've been hearing this a lot: high default tendency. This is completely a paradox. If I have a simple question to the audience. If I'm a businessman, if I am a legitimate businessman, if my business is doing well and I actually want to grow my business and I come to a bank for financing, and the bank actually is kind enough to allow me financing, how is my tendency to default higher than any other business that comes to me for financing, be it a commercial entity or a corporate entity? My tendency to default will exactly be the same. The probability of default may be higher, and that is because not because I am by default a poor client or a high risk client. That is because innately banks have not come forward to help and assist me, and I'm dependent for a number of my actions, a number of my business decision on financial institutions. Since they are not supporting me, then all of the time or most of the time my decision making is constrained by various reasons or various factors, and my constrained decision making as SME forced me to be higher risk as compared to the deep pocketed, well-financed commercial or corporate entities where the decision making is flexible enough, with a number of sources being available to implement the financing for their decisions taken. So that this doesn't happen. So this paradox need to go away. SMEs have same tendency to default as any other client. The risk is higher, and that will remain high till we as financial institution and banks start servicing these clients. And genuine clients I'm talking about, we're talking about almost 3.5 million SMEs not being out there or not financed. So if I even choose 10% of that target market being good clients, I think there's a huge potential available. Secondly, hesitancy to share information. Now, we believe this is hesitancy to share information. I believe that's a language barrier. That's an understanding or trust deficit. They are not willing to share information because probably what we are asking for, they don't understand. If we are saying, yeah, please give us your financial statements for last 3 years, there is a probability they don't understand what financial statement is, and most of the time they would mix it with a bank statement because but if you ask them that do you maintain the record of their sales, I'm sure they'll give you a register where probably every sale is recorded. And if you ask them if you keep record of your debtors, I'm sure they'd come up with another register which has record of every sale that they've made on credit. Similarly, if you have to track, if you have record of the payments that you've made, if you have a record of inventory that you have, I'm sure all of this is pretty much there, not as organized as we want, but definitely over there. So probably sometimes we feel that we need to come down to their level, being the financial consultants, as I said, wearing that hat rather than the hat of a banker. So if we do that, I'm sure we'd be able to find a lot of these diamonds in the process, who will gradually large commercial and corporate entities and reach to the level of sophistication that we want SME segment to reach, but that will take time. And then a lot of times we've seen this comment coming in that the managerial abilities or the innovation is very lacking on the end of clients. I think I would just state that we have seen in the past a number of companies starting up from a garage of a house, reaching to probably the highest capitalized companies in the US, and probably the most innovative ideas coming out of those garages. And there are multiple examples where people had a lot of question marks on these garage run companies on the managerial abilities of the innovators, of the individuals. And we've even seen in a few cases where even at a later stage, the managerial abilities of those innovators were challenged and they were replaced by some professional, managerially able people. But eventually the experiments didn't work out the way they were expected to work out. So sometimes we overestimate or overpower that the innovation and ability, managerial abilities, are somehow synonymous to education or to MBA or to PhD. I'm not saying that education is not good. Education is very good, but education is, along with a skill set, is important. So skill set alone can also be nurtured in a way that managerially able people and very innovative people who haven't really done so well in their education can still make a huge difference. So example again are dropouts being very successful, reaching to the top capitalized companies as owners of those companies or initiators of those companies. And lastly, lack of documentation. Now, I've covered this in previous point as well. I believe lack of documentation is always mixed with our own understanding of documentation requirement. Regulatory requirement of documentation is very limited. Even the policy requirement by most of the banks is very limited. What we ask for, or what our credit approvers are asking for, is much beyond what is required. So lack of documentation is partially a problem of our expectation. If we lower our expectation, if we realize that there are a lot of documentations being asked for that are just formalities and not even regulatory requirement or policy requirements, probably we can do away with those documents and simply focus on what's important and critical in assessing the true risk of lending to a client. And true risk is not just assessed by documentation, but there are a number of other factors and a number of other ways by which we can assess the true risk of financing to a client. So with that, I come to end of the 2 slides that I had, and we can probably look at questions that are there.
Yeah. Aamish, I want to say something regarding, because I was reading the chat, and someone is asking about that the companies, small companies, they have micro SMEs, actually, they have two books, the one that are official, the one that are unofficial. Okay, this is happening everywhere, globally. It's a global trend. It's not only in Pakistan. Just to let the people know. Usually, what do we do though to overcome this from the banking side is that, okay, we have the official one, which is fine. For the unofficial one, we run some models and we define for each sector how much percentage we accept to increase the official books, the numbers of from their official books. So this is a kind of way of overcoming this problem instead of ignoring it totally. Just an idea that you may want to try.
Okay, I think we have addressed most of the questions. This is such an important topic and interesting discussion that we can go on and on hearing our experts on this, but unfortunately we have this time constraint. So while most of the questions have been answered, I'll be sharing this question with our experts, and we can have their response and share with the participants later. I would just like to say thanks to everyone for their participation, and also especially our panelists for this very insightful discussion and sharing their ideas on how can financial institutions in Pakistan play their role in increasing share of SME banking and filling the huge financing gap for SMEs by structuring better products, improving service standards, designing marketing strategies, and leveraging various resources like IT, etc., to help flourish SME banking on a sustainable basis. I would also like to take this moment to say thanks to all our participants for joining in. Some of you have asked us for the soft copy of the presentation as well. Our presenters have been kind enough to allow us to share it with you, so we'll do that after this webinar. We would also like to have your feedback and suggestions if you have any to improve this experience for you in future. Thanks again to all our presenters. And sir, if you have to say anything, otherwise we will end this seminar here, and with thanks to everyone.
Thank you. Thank you.
Thank you.
Thanks,
Thank you.
participants.
Thank you.
Thank you. Thank you.
Thank you so much. Thank you,
Thanks.
everyone.
Thanks. Bye.
Thank you very much,
Bye.
sir.